Junk bonds are even worse. I'm looking right now at spreads, the extra yield that investors earn over benchmark rates on high-yield bonds. At the lowest now since July, they've retraced a lot of their gains. We're seeing a huge bid into treasuries every time yields bid up at all. And I'm wondering, what's the trigger here? You've got international rates where they are. You have longer-term growth expectations where they are. Where is the shift here that will trigger things into a new paradigm?
Well, I just think, this is not going to happen overnight. And yes, there's a reason why bond yields are so low, and it's just the sheer weight of money, which is, exacerbated by the Fed pumping in $120 billion every month, particularly in the mortgage bonds, which is crackers, but complete crazy. But the point is that, that will stop at some point. I don't think tapering is going to start this year, but it will start next year. At that point, the market will wake up, I think. I'm not saying 10-year yields is going to go over 2%, but I think they should be the higher end of the 1% range.
Marcus, good to get you on the program. Good to hear from you, sir. Marcus Ashworth there from Bloomberg Opinion, bringing up Bill Gross. Cash is trash. Can we just build on that a little bit? The quote goes on to say, cash has been trash for a long time, but there are now new contenders. He goes on to say, will stocks follow? Tommy says, earnings growth had better be double-digit plus, or else they could join the garbage truck.
Yeah, well, okay, John, they look like they're going to be double-digit plus. Ben Laidler and many others talking about that, the Bulls, David Kostin measuring in the earning growth. What I find interesting, John, is not so much that bonds are trash, but what's the social consequences of it? This is becoming exhausting. What, John? 15 years of no legitimate real yield for savers?
Well, and the rest, Tom, if you're in Japan, say, and Europe, it's been a long time.
Are we becoming Japan?
Well, so many people are asking that question. Europe got caught in this trap in the previous cycle, Tom. Lisa, will the United States get caught in this trap this time around?
I think a lot of it hinges on whether people can spend the money that they have in their deposits, in their savings account. I was just thinking about this. It's trash. Cash is trash. Everything's trash. Where do you go? They're better, on a certain point, if there's so much money out there in the financial system, at what point does it go into the real economy, or does it just keep getting recycled back into some of these assets? And if it does, there's no reason for them to sell off. And this is the conundrum, right? Unless people actually start using the money for real stuff or real experiences, you're going to end up with the same paradox on and on and on. And John, you look at this, what's going to trigger the reinvestment?
I remember the start of the previous decade, and we hated bunds at 1%. And Tom, we really hated them at 50 basis points, and then we despised them at 0. And where are we now? Negative 40 basis points, Tom?
I think we can state on September 2nd, it's an artificiality, and we're all dealing with it. What I see, John, again, we really didn't do the correct Dow Jones data check today. John, the Dow lags 35,300.
Thanks for that,
the
Tom.
NASDAQ on fire.
There we go. The S&P up as well, up 0.2%. Value add on this program, as always, up 0.2% on the S&P 500. Bond yields in about a basis point to 180.28. I'll get my words out, 128.69. In the next hour, Steve Cheverone of Federated Hermes, the portfolio manager, will be joining us very shortly from New York. This is Bloomberg.
First Word News, I'm Rishka Gupta. A divided U.S. Supreme Court has refused to block a Texas law banning most abortions after 6 weeks of pregnancy. Justices turned away calls from abortion providers to put the law on hold while the legal fight goes forward. The vote was 5-4. The law's opponents say the measure will ban abortion for at least 85% of the patients in Texas. The remnants of Hurricane Ida ripped through New York, New Jersey, and across the Northeast. That triggered tornadoes, thunderstorms, and torrential rain. Streets were inundated, traffic was a mess, and train services were suspended. In Manhattan Central Park, more than 3 inches of rain fell in just 1 hour. A think tank says that about 2.1 million jobs in the UK are still affected by the coronavirus pandemic. The Institute for Public Policy Research warned of what it called a hidden jobs gap that refers to positions that remain furloughed or lost. The British government is preparing to end its flagship wage support program at the end of the month. China is ramping up financial support for small businesses hit hard by the pandemic. The People's Bank of China will provide more than $46 billion of low-cost funding to banks so they can lend to small and medium-sized companies. The economy has shown further signs of a slowdown in the wake of more virus outbreaks and tight property controls. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In Afghanistan, our mission, our military mission, has now come to an end. And we're going to learn from this experience as a military. How we got to this moment in Afghanistan will be analyzed and studied for years to come.
General Mark Milley there, the Joint Chiefs of Staff Chairman from New York City this morning. Good morning. Alongside Tom Keene and Lisa Ravitz, I'm Jonathan Ferro. Here's the price action this Thursday morning. Your equity market higher by 7 points on the S&P 500, up a little more than 1/10%, advancing 0.16% to be precise. Into the FX market, euro-dollar firm, a stronger euro by a little more than 1/10%, 118.54 on that currency pair. And TK, just to round it out into the bond market, jobless claims a couple of hours away. Your 10-year, 128.69, yields in almost a basis point.
And jobs day tomorrow, but John, I'm going to go to the real yield, negative 1.06. Basically, stasis in the bond market as the money flows to equities.
Yeah, and just playing payrolls roulette just quickly, Tom. 725 the estimate now, coming in from about 750 from yesterday.
Yeah.
That not so much off the back of the ADP, I don't think, much more so off the back of the ISM with that negative employment component.
Yeah, we'll have to see. I mean, you know, we looked at ADP and we'll look at claims here in an hour and X minutes and onward and forward. Right now, we look at Washington. There's 8 ways to go. It's an odd day after the shock of Afghanistan and the continuing story of our new relationship with the Taliban. Jack, I know Lisa and John got a million questions. Let me ask one. What's our relationship going to be with the Taliban? Does anyone know?
No, nobody entirely knows. You know, when you parse the statements from the president and the secretary of state and others in the administration, there are hints of trying to work with them to some extent, especially because there still are people, including some American citizens, who want to leave, and that's left to diplomatic means now. But that's the biggest X factor, the biggest variable going forward, probably in that region, is to what extent do we negotiate with them on a day-to-day basis.
How is the administration doing at multitasking? Every administration faces this, but how is this administration doing at partitioning the president's time?
It seems to be going reasonably well, but keep in mind there's one big push in September that is going to determine the success or failure of a lot of what the administration wants to do. They need to work on multiple bills, their infrastructure bill and this $3.5 trillion bill. They still need to manage the hurricane response, and there's the debt limit deadline that is looming sometime in this fall. So we will actually see the results probably in September to see how they're really managing their time. It hasn't blown up in their faces yet, but it's going to be a very, very tough month ahead.
All right, so let's talk about some of those issues, and particularly the debt ceiling. This is actually something that a lot of analysts have been citing as a potential risk factor for markets. How is the White House trying to wrangle support to get some sort of extension passed or some sort of debt ceiling lifted so that they can push on without defaulting?
There was some communication yesterday between the White House and Senate Democrats on the basics of what the plan is, but no big deal. They're banking on a bipartisan deal. It's possible to address the debt limit in a partisan way through the reconciliation process, but the instructions that we saw earlier this summer, last month, from Democrats did not include anything on that. So the game plan that Democrats have set out is they need at least 10 Republican votes. They need 60 votes total in the Senate. Republicans have pushed back hard on that. So it's not entirely clear how they win over Republican votes unless they can come up with some sort of fiscally conservative measure to attach it to. They may just try to attach this to a short-term government funding measure and say that if you want to keep the government open, you also have to vote for a debt limit measure. So both of those are must pass. So it's a tough issue right now.
Jack, this feels procedural. This feels very Washingtonian. And we're dealing with something very tangible, and that is the aftermath of Hurricane Ida, the fact that you saw a lot of failures in the infrastructure space. We're going to be hearing from President Biden at 11:30 a.m. as the Northeast deals with floods, with deaths, with a whole host of issues, with clogged roads, with cars washed out, just stalled out in the middle of the highway. I'm wondering what the administration plans to lay out for near-term, help here, but also longer-term to try to shore up some of the roads, bridges, and frankly, levees around the country.
Yeah, the short-term stuff, they've laid out some of the basics, and it's nothing surprising. You know, in the areas that were hit first, they have talked about the federal government has helped set up health centers and a health emergency response. They've tried to help get the electric grid back up and running. But we're still in the stage where they're determining the longer term damage. And some of that speaks to the need for an infrastructure bill. It's unclear if they would tack extra things on in response to this to an infrastructure bill, or maybe more likely have a separate bill depending on exactly the extent of the damage. But that can take a little while, especially, you know, looking at New Orleans. A lot of the issues aren't with flooding, but with electricity outages, which can be a little bit of a longer term problem because it can take a couple weeks to get that back on for some people. It can cause all sorts of health risks, communication issues. So we're still in a confusing time right now in terms of putting a number on the damage and figuring out what the federal government needs to do other than that very initial emergency response.
Jack, as we stagger into September, folks, the Washington Post just summing up, I believe off of Fox in New Jersey, Newark, New Jersey, the wettest day in 90 years, just to give our international audience some scope and scale here. Jack, I see lots of cogent notes about the moderate Democrats in Washington. Who is leading the progressive Democrats? I don't see those notes. Who is the voice of the liberals?
That depends on the exact issue. There's a large progressive caucus in the House, but it's a bit watered down. It's not like what you saw with Republicans with the Freedom Caucus. On certain issues, they'll be vocal on the social spending bill, the $3.5 trillion bill. It might be people like Pramila Jayapal. It might be Mark Pocan. On other issues, if you're expecting a hardline fight with leadership, that would be more the squad, the Alexandria Ocasio-Cortez kind of younger progressives. But you know, that's an issue that maybe still has to sort itself out. Who exactly is the leader of the progressive? On legislation, especially on the bills coming up, I would probably look to someone like Pramila Jayapal, who helps lead the Congressional Progressive Caucus.
Jack, we got to go. We've got to leave it there. Thank you, sir. Yeah. Jack Fitzpatrick there, the Bloomberg government reporter down in D.C. Tom, you mentioned Newark, New Jersey, the Liberty International Airport. Look at this for a stat from the National Weather Service. 6.42 inches of rain in the 3 hours ending at 9:51 yesterday night, Tom, yesterday evening. The equivalent of 7 weeks of average rainfall falling in just a few hours. Unreal.
Yeah, and now off of Martha's Vineyard, a little bit to the north of Edgartown as well. So it's less of a storm now, John, but nevertheless, Massachusetts hit.
We'll be catching up with Greg Bartle in the next couple of hours, BNP Paribas US Head of Equity and Derivative Strategy. Looking forward to catching up with Greg in just a moment. Your equity market up 0.2% on the S&P from New York City this morning. Good morning. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at Frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
The July jobs report was strong.
This is an across-the-board favorable report.
More money, more hours, and more people working.
Wages up.
We're seeing our economy moving forward.
Unemployment down.
The unemployment rate declines by 0.5%.
But will Delta hit the brakes on the momentum?
We could still see the consumer become a little bit more skittish.
A lot of kind of negative surprises focused really on the Delta variant.
Tune in for the August jobs report, Friday on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Live from New York City for our audience worldwide on TV, on radio. Here's the price action this Thursday morning. Good morning. Your equity market up about 8 on the S&P, advancing 0.2%. On the Nasdaq, up about 0.25%. The Russell doing okay, up 6, up a similar amount. The story hasn't changed. We are pushing a ton of demand through a supply-constrained economy and generating a lot of price pressure. Will that change? And what does that mean for this bond market as we approach the back end of this year? Switch up the board and get to the bond market. 2s, 10s, and 30s. Your 10-year, 128.35. Yields in about a basis point on 10s, on 30s, Tom, in about a basis point as well at 190.38. But that's the conundrum, the dilemma for so many coming into September. And for many, they thought September was the answer to these supply constraints, or the beginning of answering that question. With the return to school being one part of this story, Tom, and the other being the expiration of enhanced unemployment insurance. And once we work through this, perhaps labor starts to come through in a bigger, more profound way. Tons of demand, Tom. Can we meet it with supply? We've been asking that for months, and that question hasn't changed.
John, you've got the number up there. I'm following the VIX in the equity market, but John, that 30-year bond yield to me is the easiest number to follow, and it's going to revisit a 189 handle as it did 2 days ago. You'll wonder, well, that'll be into the jobs report and after.
190.38 on 30s, Tom, in about a basis point. We'll build on that in just a moment. Let's finish on this. Crude, Brent crude, still in and around 70-ish, just north of that level, in and around 72 at 71.91 on the session, up about 0.5%. OPEC Plus doing exactly what they said they would do, Tom, and crude still elevated today, about $72 a barrel. Commodities doing okay, for crude at least, Tom, hanging in there at 0.4%.
Absolutely, John. Thank you so much. Right now on the storm, we're continuing to follow it. Rob Carroll and following it for us on radio, on television as well. We'll have much more on that. Again, 8 deaths reported in New York and New Jersey now in this horrific overnight storm. We continue to be focused on the markets, and we do so with Greg Bowdle, who took mathematics in school with BNP Paribas. And Greg Bowdle, you know it's all about the marginal bid and the marginal ask, and you say the marginal bid right now are share buybacks. What does that mean for our listeners, our viewers?
Yeah, thanks, Tom. Well, I think when we look at the broader equity market, we think the positioning generally is stretched, and we struggle to see where the marginal buyers are coming from for equities, apart from share buybacks. What we saw since September last year, every quarter we've seen share buybacks incrementally get slightly larger. But when we look at the last reporting season and we look at the announced buybacks last quarter, there was really a step change. And we think buybacks can be a big driver through the back end of this year.
They're a big driver, but what happens when they go away? I mean, is the history there? There's a persistency and they go away when earnings come up? I mean, a risk to the market? Or is it a big drop that would be in order as the bears talk about we need a 10% correction?
Well, what we see with share buybacks is that they tend to be quite sticky locally. So if we have a modest pullback in the equity market, 5%, 10%, we would expect to see an acceleration of share buybacks. Corporate balance sheets are in good shape. There are no reason for corporates to step back from share buybacks if there is some local market weakness. If we have a big economic downturn, such as what we saw in 2020, that's a different story. Buybacks got slashed in 2020. But we think we're much more at risk of a shallow drawdown, headwinds for markets, and that's the type of environment where buybacks really remain a strong support for equities.
Greg, can you characterize what a shallow drawdown is? What is that?
A shallow drawdown I'd characterize as somewhere between 5 to 15% through the back end of the year.
So
avoiding
up to 15% though, Greg. That's still quite a sizable move.
Yeah, no, I think there are growing storm clouds for the equity market. I think there are some headwinds that we need to be wary about. But I would differentiate, particularly for buybacks, between a significant but shallow move, 5 to 15%, and the type of sell-off we saw last year, which did see buybacks get slashed. So essentially, what I would characterize as a shallow drawdown is something that's not a bear market. It's not going to drive an economic or necessarily earnings recession, and it's not going to importantly stop things like the share buyback program.
Greg, a lot of people have pointed to the fact that we've seen already a drawdown that's material, 5 to 10 to 15% in specific sectors. And that from a headline level, you may not get the full-on drawdown. How much do you go in and you buy specific sectors that experience a drawdown the likes of what you're talking about versus waiting for the whole index to move in tandem?
It's a really important point, Lee, and I think it really depends what you think drives the drawdown. I think yesterday's price action in the market was a great example. Felt like a risk-off day to me. You saw energy, financials underperform, and it was utilities and real estate that were leading the market. But you look at the headline indices, the Russell, the NASDAQ, the S&P, they were all in small positive territory. So ironically, what you need to see the broader market sell off is a different type of de-risking. You need those growth-heavy, index heavyweights to actually come under pressure. So the type of thing that could drive that is potentially higher interest rates, maybe higher tax rates. And it's not necessarily going to be driven by a big cyclical downturn in terms of the economy. It could actually be driven by some robust economic data in the final quarter that sees a reversal of the pullback in rates that we've seen over the last couple of quarters that ironically brings equities a little bit lower. But again, that is something that I think drives a shallower drawdown, not a tail event.
Greg, here's what I'm struggling with. I'm thinking, what will the bond market do if there is a 10 to 15% drawdown in the stock market? And I think it'll rally, right? I mean, the idea that treasury yields are going to go up so far, if equities are falling out of bed, wouldn't you just see a rally into the bond market and then it starts all over again, so it self-perpetuates? I mean, is this sort of the ballast, the wall of money that we're talking about that will keep this going and frankly prevent any kind of drawdown at all on the headline level?
Yeah, I think this is one of the things that we've spoken about, that there is something of a virtuous cycle that certainly for some of the large cap tech stocks in particular, there is something of a self-correcting mechanism. I absolutely agree with you that if we are to have rates derail the equity market, it will only go so far because it is likely to be automatically correcting. I think that when we look to December 2018, that's a good example. We had a hawkish Fed. We had earnings soften that drove a 20% drawdown in 2018, but ultimately that marked the end of the tightening cycle, and the Fed reversed course, and that took the market back up in the following quarter.
Greg Bottle, let's go Greek right now. You're a derivative guy. The weather's perfect in Crete this morning, so let's go there. The Greeks right now, in the character of this advance in equities, the gigatechs doing so well, some of the other stories that are out there, what are the dynamics? What do the Greek letters actually say right now about this great bull market?
I think it's fair to say when we look at the options market, there's a little bit more of a hint of caution in the options market than there is in the broader equity market. You know, if we just look at the price of index options, they're not particularly high, but relative to where realized volatility is, relative to how much the market is moving, they're a little bit elevated. But that's not really the full picture. The story that's most interesting in the equity derivative space at the moment is the quantitative skew. So this is the price of downside optionality relative to upside optionality. And what we see is that that is at a very elevated level. If we look at the short-dated skew on the S&P, it's around the 90th percentile. So there is much more demand for downside optionality than upside optionality. And I think that maybe gives a little bit more of a bearish signal than what we're seeing in the broader market.
Interesting. Greg, good to get your thoughts. Thank you, sir. Greg Bandel there of BNP Paribas. And Lisa, I think you brought that up yesterday, the clamoring for downside protection more recently.
Yeah, but basically, if you look at the internals, you can see some particular nervousness, or at least not complacency. And you see that also in some of the rotations. Again, John, look, the valuations are not very good for anyone, right? Everyone looks at this. Nobody wants to buy things at this price. But it's hard to understand the catalyst that will cause a sustained downdraft. And frankly, the fragility just isn't as fragile if you look at the underlying technicals, at least according to some. And this, to me, I think, is telling. I mean, perhaps the fact that people are looking at this tells you everything that you need to know about a bull market and justification for it to keep going, but still, I thought that was notable.
Look, your question about the bond market I find really interesting. Tom, what would the bond market do if we had a drawdown, in Greg's words, of something close to 15%? Well, it depends what causes the drawdown in the equity market. If it's inflation and a Fed that's got to rush in a little bit more quicker, I think there's a question mark, an open question as to what would happen with treasuries in that environment.
I totally agree. And, you know, we don't have the time here, John, to go into the true definition of a drawdown. I know it's in an appendix to your new book, Drawdown Meditation. But seriously, drawdown, correction, bear market, crash. Do we know anymore what these phrases mean? And the only way we're going to learn them, John, is to experience them. And it's been since time began, since we have. The bond market will react when you see those equity moves.
Well, given the straight line we've seen over the last year, Tom, on the S&P 500, a 15% move would be quite disruptive. But if it's inflation that leads the correction, if it's the Federal Reserve that has to change policy, Tom, is that a treasury market that rallies or sells off?
It's got to sell off. Lower price. I'm sorry. It's got to go lower price, higher yield.
Well, precisely.
But we wait and we wait. Dominic Constant at Credit Suisse, John, has a chart, I'll say from 20 years ago, maybe 15 years ago of everybody predicting rates up. The beautiful lines off the Credit Suisse chart. Rates up, rates up, rates up. Wrong, 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 wrong.
But TK, that's what you've just described is toxic. Just think about it. Totally toxic. If you had a move that big in the equity market, followed by a sell-off in the Treasury market, high yields, what cuts that? What cuts that? What's the circuit breaker for that if the Federal Reserve has to come in quicker? And I'm not saying that's not my base case. I'm just exploring this with you right now. I just think that's totally toxic for investors.
On a tail risk basis, it's tangible, needs to be measured, needs to be counted. But is it going to happen? And it just hasn't happened.
Sure.
You got to be aware of it. And you know, I tell everybody when I lecture on this, John, it's real simple. You shouldn't be in the stock market unless you know you're going to go down 18% as a rule. And every once in a while, as you get older, you're going to go down 35%. That's normal. Where we are now isn't normal.
It's not, and Lisa, the conversation we're having right now, that's the ultimate risk.
That people are complacent, that they sort of just expect things to keep grinding up. As I'm sitting here, I've been thinking a lot about this idea, what could potentially trigger the inflation that you're talking about, John, that actually would be hard for the Fed to control and perhaps wouldn't necessarily lead to bonds just being a buying opportunity. And I'm thinking it has to be driven by wage gains. It has to, right? It has to be driven by the labor market. If people feel like they're getting paid that much more on a consistent basis, they will start spending those savings that have just been sitting in the banks. And frankly, they might take out more loans. You are not seeing the lending activity pick up yet. And at that point, that could trigger it. But until we see that, I just don't see it, John.
Lisa Bramage, Tom Keene, Jonathan Ferro on Bloomberg Surveillance. Your equity market up 8 on the S&P 500, advancing 0.2%. Yields in almost a basis point to 128.69. From New York City, on radio, on TV, for our audience worldwide, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. The toughest restriction on abortion in the U.S. will stay in place for now. A sharply divided Supreme Court refused to block a Texas law that bans most abortions after 6 weeks of pregnancy. Abortion providers had asked that the law be put on hold while the legal fight goes forward. Lawmakers in New York have extended the state's freeze on evictions and foreclosure through January the 15th. It was supposed to have ended 2 days ago. The move will provide relief to homeowners, renters, and small businesses that have struggled during the pandemic. The remnants of Hurricane Ida ripped through New York, New Jersey, and across the Northeast. That triggered tornadoes, thunderstorms, and torrential rain. Streets were inundated, traffic was a mess, and train services were suspended in Manhattan's Central Park. More than 3 inches of rain fell in an hour. China is using talks with climate envoy John Kerry to push the U.S. to an improvement in the border relationship. The Chinese foreign minister told Kerry in a video call that Washington must take the first step to improve ties that got worse during the Trump administration. Meanwhile, Kerry said China must do more to curb its carbon emissions. Bloomberg's learned that the U.S. Justice Department is preparing a second monopoly lawsuit against Google. This case involves allegations that Google is abusing its dominance in the digital advertising business. The company is already fighting a Justice Department suit over web search. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Angela Merkel, after 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg Television and Radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
You absolutely will need a booster. The question has never been, will we need a booster, right? With viruses that mutate, like change over time, which we know boosters are necessary. Now, the question is, when do we need a booster? When you have a global supply chain shortage, should we be prioritizing boosters or unvaccinated individuals?
Bhakti Hansati there of Johns Hopkins, the Associate Professor of Emergency Medicine from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action this Thursday morning, shaping up as follows, up 0.15% on the S&P, advancing 7 points. Outside of that, into the bond market, yields in almost a basis point. Really muted price action here, 128.52, euro dollar positive, stronger euro by almost 1/10% at 118.50 in around about an hour and 42 minutes, Tom. We'll get jobless claims in America. Then it's on to the big one tomorrow morning. It's Payrolls Friday.
Go beneath the headline date at 8:30. Some real interesting nuances there on wages and also on the unemployment rate. A fully employed America, how close are we to it? Right now, on the pandemic, Jennifer Nuzzo, Johns Hopkins Center for Health Security. Jennifer, we spent a large amount of time yesterday on the booster shots. Let's move on by that to the battle of the vaccinated versus the unvaccinated. Where will that battle be in 30 days?
Well, I mean, I think you're increasingly seeing employers require vaccination for their employees, and I think that that's going to have a huge impact in terms of uptake. I can understand why employers are doing that. They want to get back to work and they want to make sure it's done safely. And as this pandemic drags out, it's abundantly clear that vaccinations are the only way to do that. It's unfortunate. I really hope in my heart that people can see the inherent value and benefits of these vaccines and they don't need to be coerced in order to get them. But the fact of the matter is, this is what we need in order to get back to normal.
Every media organization, including Bloomberg, has pretty charts of pretty maps of pretty colors, and it's a homogenous America, a homogenous France, and on and on and on. Explain the vaccinated, unvaccinated granularity beneath those pretty colors. The granularity of New York City, the granularity of Wyoming, etc. How partitioned is vaccinated and unvaccinated?
Yeah, well, we see real variations between states where, you know, the Northeast, for instance, is a very highly vaccinated part of the country compared to other parts of the country. But those state level numbers really hide, I think, what are dangerous pockets of, you know, gaps in immunity, even within states. And so that's why you'll see cases rising in states that have, on average, you know, good vaccine uptake. We're also seeing a lot of variation in terms of who has vaccinated their teenagers. And, you know, as kids are going back to school, I think that's really important. The really interesting thing is that even in high vax states like New York, uptake among teens is quite low compared to adults. So that suggests, I think, some underlying lack of confidence in the vaccines. I will assure you, although my kids are too young to be vaccinated, if the vaccines were available, I would certainly have them vaccinated.
Dr. Newt, we're talking about the vaccination rollout amid a backdrop of a hurricane season, amid a backdrop of natural disasters that are bound to occur, and the fact that we're going to get a health system that has to respond to other crises. How fragile has the health system become in its focus on COVID as it responds to the rest of the issues that naturally come up?
Oh, it's incredibly fragile. And I mean, we know this, right? If you've ever been to an emergency room for something, you know that you have to wait a long time. They're always operating at a very high level of occupancy and, you know, volume on a day-to-day, absent a pandemic, absent a hurricane where you have to evacuate people who are, you know, in the hospital. So it's incredibly difficult. And, you know, even if we see a small surge of COVID cases, that is going to put strain on the whole system. So that means if you show up, not with necessarily COVID, but a heart attack or anything else, the level of care that you're going to get is probably not going to be the same. So we all have a role to play, and this affects all of us. We all want to be able to survive survivable illnesses or conditions, and that's so much harder to do when we have a pandemic raging and natural hazards in the backdrop.
Dr. Newt, it also raises a question of when we move from a social distancing regime to a new normal where there's a certain level of acceptance of certain viral cases and perhaps an increased push to vaccinate, or at least to create barriers to protect those who are not vaccinated. How close are we to moving to that regime where there is a sort of resurgence back to a normaler type of society?
I think we're getting there. I mean, we are, you know, making some progress, not as quickly as I'd like in terms of getting people vaccinated. And once we get more people vaccinated, you know, and keep them out of the hospital, that does take off the pressures. I mean, remember, we all locked down and had to stay in our homes because we were acutely concerned that the health systems, hospitals were going to be completely overwhelmed. Vaccination helps defang the virus and uncouples the cases we see from the amount of serious illness that puts people into the hospital. So I think we're getting there. I think we still, as a country, have to identify what our goals are in controlling the vaccine. All of this conversation about boosters, I think, stems from our not understanding what we're trying to do. And in my view, we have to remain laser focused on keeping people out of the hospital and making sure they don't die. That's important above all.
Jennifer, one final question was, email just came in. This is Lisa from the Upper West Side. The kids remote again. I mean, give us the update here, September 2nd, on your thoughts on schools and masks. I mean, give us the official John Hopkins statement on that.
I'm going to give you the official Jennifer Nuzzo mom of two statement on it, which is, I think they're really, really helpful. In particular, because if you have exposure, that maybe fewer kids that have to quarantine at home. And the goal is really to keep kids in school for as long as possible, and masks add a layer and make us more confident.
Jennifer, thank you. Anything else to say there, Tom? You're done. just mumbling.
No, I'm mumbling. I mean, the kids, it's brutal. I mean, the hurricane's going on last night. You know, it's really serious. I mean, really, really bad. The kids, you know, they're like, whatever, they're on their phones, whatever. The Wi-Fi goes out. John, in America, we count Mississippis. I don't know what you count in England. 1 Mississippi, 2 Mississippi. I got the 7 Mississippis, and afterthought came in, OMG, the Wi-Fi's out. When's it come back? I said, end of school year.
Jennifer Nusso, just quickly. Jennifer,
thanks, Jennifer.
Nusso of Johns Hopkins, the Centre for House Security Senior Scholar.
The Wi-Fi went out.
Tom, just quickly, some good news, just a rare light coming out of the hospitalizations of COVID in the United States. Lisa, they're starting to head in the right direction.
Yeah.
Just a little bit, starting to decline.
They're starting to decline. And how much will this direct policy, right? How much is this the sort of determining factor to loosen things back up? How low do hospitalizations have to be for people to get on with things, especially as vaccinations go up? Since ultimately, if people get sick, but they don't get that sick, we're not going to close down the entire society for a cold.
National decline driven by falling numbers in recent hotspots, Florida, Texas, and the Deep South. Tom, we've got to stay on top of that.
It's a glimmer. There's no question about it. John, you know, I've heard this from the pros. Viruses slip away, and we usually don't know pandemic to pandemic why.
The Delta variant been part of that story as well, Tom, more recently in the UK and elsewhere. Futures this morning up 8 on the S&P, advancing 0.2%.
Value add.
Equities doing okay. Yields in a basis point, so 128.52. Tom Keane without power last night. You're going to hear a lot about that through the rest of this morning.
I sat by the fire, played guitar.
I'm sure.
I'm 7 seconds.
Tough times in the Keane household. On the 52nd floor. From New York, this is Bloomberg.
会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、どれだけオリンピックの心待ちにしていたのかっていったことがよくわかるような今日の表情です。
Crypto, you have a world of young people that want their own financial system and their own culture. And It is very powerful, and I'm a big believer in it.
Okay, traders, let's move on our stop to 118.50. It will give us 5 pips. Please move on your stop. In our case, it will give us 500 pounds in profit. In your case, please check how much broker pays you per 1 pip. Okay, this is what amount you decided to invest when you trade in euro or any other forex pairs, right? If you want to get the strategy, please go to company.co.uk. There is also a webinar. You can register for webinar, and I will explain. I will personally provide webinar, and I will explain to you how to do money management, how to calculate the right entry point for certain pairs. Okay, stay safe, guys.
Up 0.2% on the S&P 500. Tom Keene in New York and beyond. It's the calm after the storm.
$250,000 without power. I know we're going to get to the wonderful Rob Carolyn here in a moment. John, the scope and scale of it. I was in the heart of Hurricane Bob, and I think it was 1991. That was nothing compared to what I witnessed last night.
Lisa, more than 3 inches of rain in a single hour in the heart of New York.
Yeah, and the idea that the hurricane aftermath of Ida really affecting the subway system in particular. You saw just pictures, images of water gushing in, and the highways completely inundated as cars get marooned.
Tons to get through this morning. Let's start with a price action. Your equity market futures positive by 8 points on the S&P, advancing 0.2%. Into the bond market, yields come in by almost a basis point to 128.69. The euro just a little bit stronger here, Lisa. Euro dollar 118.53.
Not a lot of drama heading into the jobs report tomorrow. Today we get a preview of perhaps how much strength or not there is in the labor market. 8:30 a.m. we get U.S. initial jobless claims. The expectation is for the momentum downward to continue. Down is good. We want fewer jobless claims to indicate that the momentum does continue. 11:30 a.m. we're talking about the flooding in the tri-state area in the Northeast. President Biden is going to be delivering remarks on his response, the administration's response to Hurricane Ida, and perhaps the aftermath. Dovetail that into the discussion about infrastructure spending. How much is this going to be a related discussion? And after market, we get perhaps a view into the chip shortage, into some of the demand for stay-at-home types of remote working devices. Broadcom reporting earnings, as well as HPE and DocuSign. John.
Lisa, thank you. Let's turn to the main event. Rob Carolyn joins us now, Bloomberg meteorologist. Rob, it's always good to catch up with you, sir. Unfortunately, at a difficult time for this city and beyond. Rob, let's just talk about how historic the event of yesterday evening actually was.
Well, we're talking about a 1 in 500-year event, Jonathan. If you talk about just the pure statistics, there's less than a 0.2% chance of this happening every year. The rainfall totals for the Central Park are just remarkable. As you mentioned, over 3 inches in 1 hour last night. 2 hours, 4.65 inches of rain fell. In 3 hours, 5.2 inches fell. The total for 6 hours, 6.82 inches. There is not a pumping system in the country that could handle that type of rainfall in a metropolitan area. New Orleans can't handle it. The only place we could have put that type of rain would have been into the Grand Canyon.
Rob Carolyn, you are the adult in the room, and I want to cut to the chase on climate change in a 1 in 500-year statistic. It's changed, hasn't it? Do we need to get used to this?
Boy, that's such a complex question, Tom. The big issue is we got to keep in mind that the oceans are definitely warmer than they've been in the last 30 years. These storm systems feed on warm water. We had a phenomenal flow around a really well-developed circulation with Ida because it was so intense going inland. It kept that circulation. There was a great connection of tropical moisture last evening and yesterday afternoon right up the East Coast, and then north of that warm, moist air, we had cool air. So you have this warm, moist air colliding with the cool air. You're effectively wringing out the precipitation as well as you possibly can do with a rainfall rate of, I think it was about 4 inches an hour at Newark Airport. They had half an inch of rain in 6 minutes time. So when you're wringing the precipitation out that efficiently, It's just remarkable to see it. But this has happened in the past. Between 1970 and 1999, 60% of the flooding deaths have been due to inland flooding, freshwater flooding. When Camille in '69 went through the Central Appalachians, it dumped 20 inches of rain in less than 24 hours. That's the really bad thing with these strong hurricanes. Even though they're far inland from where they make landfall, they are usually prodigious rain producers, and that's exactly what happened with the remnants of Ida last night going across the tri-state area. Even into New England, we've had the south coast of New England pick up 5 to 7 inches of rain from this storm system.
Rob, but the thing is about New York City is that it is not an inland region. It does have the ocean right next to it. How much is the flooding going to potentially subside or get worse as the tides go about the day?
Well, the good news is the wind direction is going to be shifting around to the north and west, so that's going to have the tendency to push any tidal conditions offshore, so that's good news for us. In regards to local rivers and streams, they're certainly going to be up the next 24 hours, but we've got high pressure building in from the north and east. It looks relatively dry through the rest of today, tomorrow, Saturday, and then into much of Sunday, so we're going to get a chance to get those rivers up today and tomorrow and then quickly bring them back down.
Hey, Rob, good to catch up, buddy. Appreciate all of the data, all the statistics there from Rob Carolan, Bloomberg meteorologist. Tom, just going through some of the numbers that the team here at Bloomberg have put together. The source for this, FlightAware, 189 flights cancelled at Newark, 29 flights at LaGuardia, 17 cancelled at JFK. So Newark Airport taking a brunt of this.
Yeah, and we should also remember, going back down to Louisiana, the disruption in energy. But John, so much of this, and maybe we don't face this up here, is the electric grid. This is not a one-off, two-off. When President Biden visits Louisiana, he's looking at a, what, 3-month story, I would guess?
Let's bring in Steve Chevron and continue this conversation, Tom, from Federated Hermes. Portfolio manager joins us now. Steve, let's build on this.
Hey, John.
Do you think we can get infrastructure done down in D.C.?
Oh, yeah, I think the bipartisan infrastructure bill, there's certainly a clear path for that. I think when you start thinking about the $3.5 trillion kind of softer infrastructure plan, I think there's a lot more uncertainty there, and there's still a battle between the progressives and the moderate. But I think we've got a pretty clear track over the course of the next several months for at least that bipartisan $1 trillion bill. I would say, though, John, I could go a little while without one of these 500-year events, between once in an every 500-year plague and a once in every 500-year storm. I think we've had our fill for a while. Let's let things calm down for a while.
Let's carry it over, Steve, to your great abilities to asset allocate. How do you asset allocate into a once every 500 years fiscal stimulus?
Yeah, I mean, look, and it's even been a little bit more complicated, because I think the way you historically would allocate into a stimulus or a large stimulus is you want to be long in terms of cyclicals. You want to be short on duration on the bond side. And that's been the way that we've been positioned for the better part, the last almost year. However, that really hasn't worked since May. And that's been because you've had this resurgence of COVID, and that's kind of put a damper on some of those animal spirits. With those hospitalizations starting to peak and renewed spending likely to come, we think that trade can reassert itself. But you've had to have been patient with it, because it really hasn't worked over the last couple of months.
What data is most important to you? And I'm thinking about this as you talk about some of the biblical types of events that we've had, and the idea that we've seen that reflected in some sentiment surveys that have been coming off recently. I mean, what catches your attention and makes you rethink perhaps a bullish outlook?
Well, consumer confidence coming down a little bit, I think, is something to watch. It did that last year going into the fall, so that was a little bit of a head fake. But confidence is important. It's the middle syllable of economy. So we are watching that closely. I think we're likely to get more certainty and confidence over the course of the next couple of months. And I think it really starts with tomorrow's jobs report. If that jobs report is at least reasonable, I think that clears the way for the Fed to maybe announce taper as soon as September. And then we know the rules of the game, at least for the next, let's call it 6 or 9 months. So that's the thing I'm really watching.
Steve, just quickly, this is the line from Bill Gross. His quote, I'll read it out for you. Earnings growth had better be double-digit plus, or else they could join the garbage truck. Are you expecting decent earnings growth, Steve?
Absolutely. We had record margins in the second quarter. Earnings estimates are moving higher. Companies are able to pass on price, and the price that they took, they're not giving back. So I think companies are navigating these once in a 500-year events, extraordinarily well. I think they'll continue to do so.
Steve. good to hear from you. Steve Chevron, Federated Hermes Portfolio Manager. And Tom, you've been talking about this now for most of this year. Corporations will adapt. And
they'll adapt.
They've adapted.
They'll adapt. I learned that by losing money. John, it's amazing the lessons you can learn by losing money. And,
Do you want to talk to us a little bit more about that, Tom?
No, you make a dumb trade
cash.
like I made, and then you lose money. You go, what happened? And the answer is you misjudged the corporation. They adapted. CapEx, they adapt. The mystery, John, and while you were gone on your sabbatical, we had a terrific interview with David Stubbs of J.P. Morgan, who just came out pounding the table on the technological change going on right now. That's adapting.
You've talked about adapting a lot, Tom. No doubt you'll continue to do that. And Lisa, the surprise for many people, we're adapted to you, believe me, on a daily basis. Margins, Lisa, have held up big time.
Yeah, he's adapting, by the way, and being in the triple cashed, all leverage fund. So the idea that... Yeah, I mean, this is adaptation. The margin story, though, is interesting because we're seeing it hang in there as they're able to pass along those price increases. But especially as people start to see a decline in their income when it comes to the end of the enhanced unemployment benefits, there are studies that show that they start to spend less. Will the price increases be harder to pass along as it goes on?
And Lisa, just quickly, just an update here that you've sent along to the team. New York's Metropolitan Transportation Authority service on subway, bus and commuter rails is, quote, largely suspended due to heavy rainfall and flooding across the region. Tom, that according to the MTA's website this morning.
You wonder whether there will be permanent damage at separate stations. I mean, it's about the system, John. But what, if you have 4, 5, 6 stations really damaged heavily, what does that do in the coming weeks?
The MTA asking people to, quote, avoid all unnecessary travel at this time. A story we'll stay on top of for you through the morning right here on Bloomberg TV and radio. Coming up in the next hour, 8 a.m. Eastern time, Brian Levitt, Invesco Global Market Strategist on this equity market that just keeps on climbing. On the S&P 500, comfortably through 4,500, up another 8 points this morning. On futures, we advanced 0.2%. From New York City, alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Heard on radio, seen on TV, counting you down to payrolls this coming Friday as the estimate comes in just a little bit, down towards 700K from 750, following a weaker than expected employment component within the ISM. We'll talk about that data a little bit later this morning. From New York, this is Bloomberg.
With the First World News, I'm Rishka Gupta. A divided U.S. Supreme Court has refused to block a Texas law banning most abortions after 6 weeks of pregnancies. Justice has turned away calls from abortion providers to put the law on hold while the legal fight goes forward. The vote was 5-4. The law's opponents say the measure will ban abortion for at least 85% of the patients in Texas. The remnants of Hurricane Ida ripped through New York, New Jersey, and across the Northeast. That triggered tornadoes, thunderstorms, and torrential rain. Streets were inundated, traffic was a mess, and train services were suspended. In Manhattan's Central Park, more than 3 inches of rain fell in just an hour. There are reports of at least 8 storm-related deaths. And Bill Gross is talking trash about the bond market. In a post on his website, the one-time bond king and said longer-term Treasury yields are so low that the funds that buy them belong them in the investment garbage can. Gross also said that stocks could fall into the category of trash if earnings growth falls short of expectations. China is ramping up financial support for small businesses hit hard by the pandemic. The People's Bank of China will provide more than $46 billion of low-cost funding to banks so they can lend to small and medium-sized companies. The economy has shown further signs of a slowdown in the wake of more virus outbreaks and tight property controls. Bloomberg's learned that Tesla had to temporarily halt production at its factory in Shanghai last month, blame it on the global shortage of semiconductors. The automaker didn't have enough electronic control units. The stoppage lasted about 4 days. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When policy in its various guises steps away from the US, from any major economy, the economy literally has a heart attack. So without temporary inputs from policymakers, the current state of the economy is unsustainable.
James Athey of Aberdeen Standard Investments sounding a little bit bearish in the past 24 hours from New York City this morning. Good morning. Alongside Tom Keene and Lisa Brambles, I'm Jonathan Ferro. Here's the price action this Thursday morning, 1 hour and 12 minutes out from jobless claims. Where are we, Tom? Up, thank you. Up 7 on the S&P, advancing by 0.15%. We should have a little button, Tom Keene, and just record that, and I'll press it every single day. Up, yields down. I'd love to hear that one too, Tom, if you've got that one in you. Where are we? Where are yields, Tom?
Down.
Thank you. We're down a basis point to 128.52. You could take vacation, TK.
I could, but I don't. You use my vacation days.
118.48, up a 1/10%, and crude $69. Yeah. Where is crude, Tom?
Crude is up.
Thank you. Thank you.
The Dow up 47 points. I note the VIX 16.11 awaits claims and awaits a jobs report.
Wonderful.
Here, we say good morning. We're paying careful attention to the news from Washington up to Boston on this horrific storm, the aftermath of Hurricane Ida. Anne-Marie Horton right now with Hurricane Biden in Washington. What is the president's agenda today? What does he do to right the ship?
Well, really, it's about tomorrow, Tom. He's going to be going to Louisiana to see what the destruction was caused on the ground, take stock of the situation. Some people were asking in the press room this week about when he would actually go, and Press Secretary Jen Psaki had said no president.
Anne-Marie, I'm going to cut you off. Since Katrina, every president's got to get in a helicopter and fly over wherever the disaster is and do the photo shoot. But what are they going to do today? I'm fascinated, Anne-Marie. You're going to sit in the East Room or whatever, and they got to worry about Afghanistan, a legitimate, horrific storm, 2 infrastructure bills, and the state of the Nationals relief pitching. What's the president's plan today?
And the debt ceiling as well. I mean, today is going to be briefings, Tom, complete briefings. I don't know if he's giving any speeches today. Briefings, of course, on Louisiana as well as in Afghanistan. We know that Secretary of Defense Lloyd Austin will be going over to the Gulf as they continue to try to extract about 100 American citizens. State Department yet to tell us how many green card holders there is. And then, of course, all those Afghans that are also seeking refuge. That's part of the conversation. And then, of course, the destruction of Louisiana. What you're seeing in New York City, the over river flooding, what we're seeing in Washington, D.C., massive flooding. This the president will likely use towards his bipartisan and as well as the money that they wanted to spend on grid resiliency, energy infrastructure, coastal preservation, all of that money that didn't make it into bipartisan infrastructure. I imagine they will use this destruction from Ida and from these storms to go into the soft $3.5 trillion human infrastructure bill.
So let's go there and talk about bipartisan support for those aspects. In states like Louisiana are represented by Republicans. How much does this shore up some consensus when it comes to additional spending beyond the $550 billion bill?
It's going to be very difficult for Republicans to get on board because this means a lot higher taxes. The $3.5 trillion infrastructure, soft infrastructure agreement, which, by the way, and everyone I talk to in Washington, no one thinks they're going to get that 3.5 top line. That is the top line. This is going to be a massive showdown this autumn in Washington. But potentially, maybe we see another bill specifically about resiliency when it comes to hurricanes. But it's going to be hard for, say, Senator Bill Cassidy of Louisiana to not want to go on board with some parts of that soft infrastructure. Because as I said, the money that didn't make it into bipartisan infrastructure about specifically climate and clean energy and resiliency of these coastal lines, potentially they'd want to vote for it. But I can't see any Republican putting their name on something that has massive tax hikes.
So going forward, how much is this going to be the focus versus the international focus? How does he dovetail this sort of shift back to domestic when he still is dealing with the popularity issues that have stemmed from the aftermath of Afghanistan?
We already see his team doing that. You had White House aides brief Democrat Senate aides about the debt ceiling. This is also going to be another massive showdown. You already see the White House wanting to move forward to discuss about the domestic agenda. They have tons of teams in the White House, obviously presenting the president with what his next item needs to be, what he needs to be discussing. But I imagine the White House is very excited to move forward to leaving Afghanistan behind in terms of the continuous press questions on it and moves towards infrastructure. The problem is there are going to be hearings on this. And also, we still, again, as I said, have Americans in Afghanistan that want to come home. So this is going to be a cloud, but I imagine they're going to, as you see, a two-prong approach in Congress for bipartisan infrastructure and soft infrastructure. The White House will take a two-prong approach in terms of that's foreign policy, and we're here now to discuss domestic policy.
Where's the domestic policy of an election November of 2022? It is now September. Does your world change?
We have to wait and see, Tom. Washington changes on the dime every single day. A massive issue that everyone is talking about today is, of course, what we heard from the Supreme Court in terms of what's going on in Texas. And this now also sets up another battle this autumn when it comes to Washington, D.C., and this is about the 1973 Roe v. Wade. There's going to be a number of issues. I'm not going to look inside a crystal ball and tell you what is going to be number one next November. What I can tell you is that Americans care about their kitchen sink. So jobs, consumer prices, they're going to vote with their pocket next year.
Who let Anne-Marie have an extra hour in bed?
Yeah, I know. It's irresponsible.
She's here an hour later this morning. I've noticed that. Lisa's noticed that. The team has noticed that.
I stay up much later.
Is that right?
You don't have to justify it. You can say, I feel great. Peace
out. Is that a bid to come on tomorrow morning at 7:20 again? People want to know, Anne-Marie. You're going to keep having a lie-in for an extra hour?
Yeah, some days. We rotate. It's a democracy over here. We rotate.
Tom, should we rotate?
Yeah, we should rotate. Yeah.
Anne-Marie, down in D.C. Our D.C. correspondent.
Oh, John.
John, are you trying to get in the
should we do that?
hermetically sealed room over there?
If we rotate and he comes out here for a little
exactly.
One of us come in every day at 8 o'clock.
He does.
I think that'll work. Do you want to do the market check at 7:30, Tom?
Yeah, I'll do the market check, but in it will be the Dow.
Okay. Tom, that's part of the negotiation. You can do the Dow. I'll sit in there and make noises as you work through it.
Yeah.
Let's try it.
Let's try it now.
Futures up 40.
Thank you, Tom. Up 7 on the S&P. Up 7 on the S&P and advancing a little more than 1/10%. Yields in almost a basis point. TK to 28.69. Payroll's Friday. You keep talking about Prosecco. How much Prosecco have you been drinking?
No, a little less since you've come back more, frankly. But, you know, the subway's out. I mean, you know, we're trying to make light of this. You know, John, we got to say this as a data check. Our first responders need to be careful out there.
Oh, absolutely.
With wires down, buildings collapsing.
Really dangerous, Tom.
Yeah.
Really dangerous. And I think what's interesting here, it took many people still, Tom, by surprise.
Yes, me. I failed. Absolutely.
You know, this was the first flash flood warning for the New York City area ever. Just to put that into perspective,
from
the Weather
like 12
Service,
hours.
from the National Weather Service, that was the first one ever, flash floods. That is something of the desert, not of New York City.
Coming up, Terry Wiseman, Macquarie Capital Director of Global Currencies
45.
and Interest Rate Strategy. Are you going to do this, Tom?
Yeah.
You're going to do the market check at 7:30.
No.
Oh, no. Okay, you're backing away. All right. From New York on radio and TV, this is Bloomberg.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. I mean, if you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
The July jobs report was strong.
This is an across-the-board favorable report.
More money, more hours, and more people working.
Wages up.
We're seeing our economy moving forward.
Unemployment down.
The unemployment rate declines by 0.5%.
But will Delta hit the brakes on the momentum?
We could still see the consumer become a little bit more skittish.
A lot of kind of negative surprises focused really on the Delta variant.
Tune in for the August jobs report, Friday on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything.
Okay, traders, we've done it. Position closed on euro, as you can see, at 118.502. We have 5 pips, or in our case, we have £500 in profit. Let me show you where. just right here. We closed our position. Okay? So stay safe. Well done, and I'll speak to you later.
That 2% call getting pushed back into next year for 2022. That's the year-end median forecast, Tom. Estimate, guesstimate, call it what you will. 2.01% year-end 2022, no longer Q4 of 21. Your equity market okay this morning. Yields coming in, not even a basis point on a 30-year to 190.86. Yields in about a half a basis point. The debate has not changed. Demand is really solid. Will supply come in to meet it? And what does that mean for the central banks?
Yeah.
And what does that mean for the central banks on either side of the Atlantic? The ECB on one side, the Fed on the other. How do you push that through the FX market? TK, let's get to euro dollar just quickly and work through this together. Euro dollar 118.49. Morgan Stanley and Matt Hornback are the team looking for a move down to 114. And not about divergence of the data, Tom, between Europe and the United States, but divergence between central banks, the reaction function between the Fed and the ECB. And for Matt Hornback and Morgan Stanley, that's a story in the dollar's favor. Euro dollar looking for a move down to 114 right now, Tom, about 118.50.
Well, I saw Matt Hornbach in one of your other properties yesterday, which is, I assume, where we learned about that as well, and certainly an outlier call. To me, John, what's interesting is this way or that way, it's the scale of the move. Nobody's ready right now for four big figures.
Finely balanced, Tom. This whole debate is so finely balanced. Lisa mentioned payrolls on Friday as good news, or good news, bad news, good news. What is it, TK? I think that debate is wide open. You lost me too, every single morning. 118.49 on euro dollar. Where is the Dow? Dow futures.
The Dow
59, Tom, up
Oh
2
my
tenths of
gosh.
1%.
Oh my
There you go.
word.
Just to keep us on a friendly basis this morning.
Yeah, you know.
That's the price action. Let's get you some
Romain will
movers.
save us.
It's Romain. Morning, Romain.
Hey, good morning. Everyone's lost this morning. The macro story has actually pushed a lot of folks to the sideline, of course, as they wait those Friday job numbers. As far as some of the individual stories out there, keep an eye on Moderna. Those shares slightly higher here in the pre-market by about 1%. The company did finally release the results from that study of using its vaccine as a third dose booster shot and said it will seek formal approval from the U.S. and Europe. Another big story that actually just crossed the wire here, this is Baxter, the big medical device company that makes a lot of IVs and infusion products, going to buy Hillrom. This is a big maker of like stretchers and other type of hospital equipment companies. It's a $10.6 billion deal, roughly, give or take here. And remember, Baxter had actually approached this company a while ago based on Bloomberg reporting, and it offered about $9.6 billion. So basically a sweetened offer here. Hillrom found that enough to accept it. You're seeing the shares up about 3%. We should point out that the price is actually 156 here on the deal. The shares right now are at 149. Read into that what you will. Baxter slightly higher as well, up about 0.5%. Flip up the board. There's a lot going on in the software space. We've been getting a lot of earnings from a lot of different companies, and all of them really seem to be disappointing here. Viva Systems down here about 7% here. The company actually did beat on most of the metrics, but some of the guidance here, I think the investors were just looking for something a little bit stronger. Again, the guidance kind of came in on the nose, but not necessarily enough. Asana did guide higher, and investors seem to be happy with the guidance that they got out of that company. Those shares are up about 10%. And then Okta. Okta came out with earnings last night, and they beat pretty much on every metric, on every guidance, but once again, you're seeing the shares weaker here, down by about 1.6%. Todd McKinnon, who's the co-founder and CEO, he's going to be on the program in the 4 o'clock hour today, so we'll get a chance to get an idea from him as to what investors are looking for and what he expects to deliver.
Romain, thank you so much. Greatly appreciate it. One thing we've been remiss on is the European Central Bank. It is a unique character versus what we're seeing in America. Jackson Hole this, Jackson Hole that. Terry Wiseman's going to help us here with Macquarie, their Director of Global Currencies and Interest Rate Strategy. Terry, what do you look for from Christine Lagarde?
Well, you know, in some sense, the inflation situation in Europe has gotten worse in the sense that we saw CPI rally to 3% year over year, and we saw the PPIs this morning, the purchasing price indexes rise as well. But you know something, I think she has just as much reason, if not possibly more, to follow Jay Powell's lead and to say that the inflation that we're seeing in Europe is transitory. Not only that, but a 3% inflation rate in Europe pales by comparison to the 5 or 6% year-over-year inflation, the consumer prices that we're seeing in the U.S. So if the Fed could come out and say, with a straight face that we have a transitory inflation problem in the US and not a structural or permanent one. It should be easy for Christine Lagarde to say the same. Now, that doesn't mean that they won't start discussing their own tapering, but I think even if they admit that they have discussed the timing of a tapering, they're going to condition that and qualify that with their own transitory inflation theme.
Terry, I'll say something dangerous. Why aren't they embracing it? Why aren't they embracing it? They've been trying to generate it for much of a decade, for much of the last decade. Why aren't they embracing these kind of inflation prints on both sides of the Atlantic?
That certainly speaks to my view that you know, by saying that it is transitory, is to also suggest that the market should not be overly concerned that the ECB will normalize policy in the face of this inflation. So the market will read that to mean that there is a partial embrace of the situation. Having said that, look, to the extent that it's cost-driven inflation and not demand-driven inflation, there is a modicum of worry that one should have, right? We don't want to see a situation where corporate profitability, let's say, gets squeezed because there's no demand for final products in the European economy, and yet costs go up on these supply chain issues. That would be the kind of inflation we don't want to see. But I don't think she's ready at this point to say that this is the kind of inflation they don't want to see. There's a lot of catching up to do with inflation in the euro area, just as there is a lot to do in the U.S. as well.
Terry, let's
keep in mind.
Please,
just keep in mind that they changed their own inflation mandate as well to being symmetric, and that gives them the flexibility to continue to urge on this inflation.
People have called that Fed light. Let's talk about the Federal Reserve. Adam Posen wrote this recently out on Twitter. He said the coherent mainstream talk about how central banks should not react to supply shocks is fine, but saying that is the motivation for staying loose undercuts flexible average inflation targeting. What do you make of that statement, Terry?
I don't think it really undercuts it. When we talk about average inflation targeting, we talk about inflation over a number of quarters. We don't talk about inflation over that inflation over the course of one quarter should find a response or an aggressive one by the central bank. So I don't think there's any inconsistency between average inflation targeting and the view that the central bank should demur from tightening in the face of supply chain driven inflation. I think what central banks are best suited to do is lean against inflation that's demand driven. It's not the case that the inflation we've seen in the US or Europe in the last few months is the result of a sharp increase in demand. I think to me, it seems to be more commodity driven. It seems to be still narrowly focused on those areas and those items within the basket that are led by the reopenings. And until we get much broader inflation, both in Europe and the US at the consumer level, there is going to be a willingness to embrace the inflation, if you will. Now, that this does not mean that the Fed will not start its taper. That's a different issue altogether, because Jay Powell has said that there's already been substantial progress on inflation.
Has a relationship,
there will be a taper.
But has a relationship between Fed policy, between ECB policy and inflation been somewhat broken? And I say this as the inflationary push right now is coming from supply chain disruptions from commodities that, frankly, the Fed buying fewer bonds isn't going to really have significant ramifications for. In fact, some people might argue if companies have to pay more for their debt to borrow money, they'll have to pass along that much more of the price increases to consumers. It's not going to necessarily deplete some of these price hikes. So what exactly is their role when it comes to inflation that is of this nature?
It sounded for a while as if you were saying that by tightening policy, the Fed could actually create some inflation by raising the costs of companies that are indebted because they have to pay more for their debt. Their debt servicing costs go up. Try to convince a central banker of that, okay? Most empirical models of the economy, most models that the central banks look at, do not have embedded in them that view that tighter monetary policy causes inflation through the debt cost channel. In their view, the other channels are much more important
to be fair,
by which
look,
monetary policy
that's not my
price
point.
levels.
My point was just that it doesn't necessarily translate directly to curtailing that type of inflation. That was my point. I wasn't saying that raising rates is going to lead to rampant inflation, but I was just trying to make the point that it doesn't have a direct transmission channel. But carry on.
No, I think it does. Certainly through the currency, something I watch, for example. If one central bank is tightening further or more aggressively than another central bank, you should expect currency appreciation there. And that currency appreciation does depress prices. It reduces pricing power in the domestic economy. So just by through that channel alone, and I think the central bank in Europe has been sensitive, much more so than the Fed, to what the level of the euro is. Through that channel alone, I think central bank policy and interest rate policy specifically can inform the outlook for inflation.
Terry, got to leave it there. Good to see you. Terry Wiseman there, Macquarie Director of Global Currencies and Interest Rate Strategist. Lisa, higher rates lead to higher inflation.
No.
If there's ever a job open at the Central Bank of Turkey, I know a man who might be interested
I'm not,
in you taking that spot.
Thank you for considering me sort of the equivalent of President Erdogan of Turkey. I do think that there is my point was not to say that raising rates leads to higher inflation. My point is just to say there isn't a natural, obvious transmission mechanism through the debt market, certainly, to lowering this kind of inflation that's driven by supply chain disruptions and things that are completely independent of Fed control. Terry's point, though, is really well taken, that the currency transmission effect actually is significant, particularly for a place like Europe, where they import so much of the goods, and that, I think, is compelling.
Tom would love it, wouldn't you, Tom, if Lisa was the central bank governor of Turkey?
Oh, my God.
You would be able to do the decision and quote your favorite currency pair, dollar lira.
I can't even.
I had dinner once with the entire staff of the Turkish Central Bank. They were gentlemen. John, not one of them spoke English.
There we go.
That's why it was great.
Lisa would do so well.
Oh my God, John Farrow.
Equity futures up 2 cents. I'm not asking you to leave the show. You still do the show and you do the central bank rate decision as well. We want both. We want everything. 129 on 10s. From New York City this morning, good morning. This is Bloomberg.
With the first word news, I'm Rich Gupta. The toughest restriction on abortion in the U.S. will stay in place for now. A sharply divided Supreme Court refused to block a Texas law that bans most abortions after 6 weeks of pregnancy. Abortion providers had asked that the law be put on hold while the legal fight goes forward. Lawmakers in New York have extended the state's freeze on evictions and foreclosure through January the 15th. It was supposed to have ended 2 days ago. The move will provide relief to homeowners, renters, and small businesses that have struggled during the pandemic. The remnants of Hurricane Ida ripped through New York, New Jersey, and across the Northeast. That's triggered tornadoes, thunderstorms, and torrential rain. Streets were inundated, traffic was a mess, and train services were suspended in Manhattan's Central Park. More than 3 inches of rain in just 1 hour. There have been at least 8 storm-related deaths. China is using talks with climate envoy John Kerry to push the U.S. to an improvement in the broader relationship. The Chinese foreign minister told Kerry in a video call that Washington must take the first step to improve ties that got worse during the Trump administration. Meanwhile, Kerry said China must do more to curb its carbon emissions. Bloomberg's learned that at least 2 of China's Evergrande's largest non-bank creditors have demanded immediate repayment of some loans. That adds to liquidity pressures at the most indebted developer in the world, and it's the latest sign that Evergrande is struggling to make good on that $305 billion of liabilities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Okay, traders, I am placing an order again to buy euro. I'm looking to buy at 118.49.6. So order placed to buy at 118.49.6. Okay, let's see if I'll be able to fill this order. For time being, I will remove all previous point of opening and closing position. Okay. Okay. Order placed. So if you want to trade again euro against United States dollar, please do so. Please copy this trade and stay with me. Stay safe. I'll speak to you later.
transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Okay guys, position open on euro again, 118.49.6. Well done guys who decided to follow me and who decided to trade. Stay with me and I will show you, I will tell you when to place stop when we're going to close trade. Okay, anyway, as you can see from our positions, we hold two positions, one position at short position at 118.163 and another position, long position, 118.496. If you don't know how come we and how can we hold it, you need to get the strategy. I will not explain, we're not here to teach you, we're here to trade live in front of you. So if you want to follow our trades, you're welcome. If you want to do it by yourself, but by using our strategy, you need to get the strategy. Please go to company.co.uk and get the strategy so you will discover, you will find out how you can place different orders and how can you trade profitably Forex, indices, or other derivatives, other securities. Stay safe, guys.
About trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Really, to continue with high inflation for quite a while, we're going to need wage inflation. At the moment, there are some signs of that. Depends where you look, but in some countries, wages are going up quite a lot. But you know, the whole thing about the inflationary process, this is what makes it so difficult to forecast and to set policy, is the answers aren't always obvious to you.
Roger Birdle, always great to catch up with him, Capital Economics founder and chairman, going into the payrolls report this Friday and a Federal Reserve decision on September 22nd. Here's the price action this Thursday morning. We're up 9 on the S&P. We advanced by 0.2%. Yields are in by about a half a basis point, lower to 128.86. Euro dollar firmer by 0.1 to 118.48. And to round it out, crude positive, Tom, up 0.4%, $68 and about 90 cents.
Get out the calendar, John. It is September 2-ish, which means I believe 30 take away 2 is 28 days to the quarter end. Gina Martin Adams to apprise earnings, revenues, and the points in between. She is with Bloomberg Intelligence. I'm sorry, Gina, every research note talks about a guesstimate of earnings. What's our confidence in the earnings picture ending September 30?
Pretty high at this point. I think companies have pretty much baked in their third quarter estimates. Analysts are expecting double-digit earnings growth again for third quarter. More than likely, if history is any guide, analysts are still too pessimistic. We've seen this for 4 straight years now. Analysts are just a little bit cautious. They've remained cautious. We think that's most likely considering the pace of economic growth that we've experienced. The only risk really in the third quarter numbers is still about the margin lines. I think that those are the most important lines to watch. Revenue growth still very strong and consistent. It's really about margins and how companies are contending with the inflation pressures in fits and starts across the index.
So from the revenue line migrating down the income statement, you worry about margins. You've got, CFA 101. You've got cost of goods sold, et cetera. Which line should our viewers and listeners focus on moving from revenues down to EBITDA or down to net income?
Yeah, I think it's a lot of operating expense. You certainly want to watch the components that fly into margins. So not as much interest and taxes yet. I think those are certainly issues that you want to look at going into 2022, but it's cost of goods sold, it's cost of labor, it's all the numbers we're going to get tomorrow are critically important, right? Productivity, how much are you getting out of your existing labor force? How much are you having to increase wages to entice employees back to the office or back to your firm at large? Those are the critical questions. How are you contending with trade frictions and certainly with supply chain constraints, which have been more extensive than many people have anticipated? Those are the issues that are probably most important to watch for now, with interest and taxes becoming the issues to watch for 2022 and into 2023.
Gina, just to build on that, I remember back at the height of the pandemic, company after company coming out and saying, we don't have a lot of visibility right now. We can't really give you an accurate projection of what we can expect with earnings. How much visibility will they have as they give projections outward, which have had, frankly, a bigger effect on the direction of shares after some of these earnings reports?
We started to see a material pickup in company guidance emerge in the second quarter, and I would anticipate we continue to see that into third quarter. It's been a slow ramp, though. To your point, we've not been through an experience like this where so few companies in the S&P 500 give us guidance. At one point over the course of the last year, we got to the point where just 30 some odd S&P 500s were S&P 500 companies were guiding on the outlook. We're now in the 70 to 80 range. That's still perilously low considering it's 500 companies we're looking at. Nonetheless, they are starting to incrementally get more optimistic. One of the lines of guidance that I'm looking at for third quarter, which was really quiet in the second quarter, is what are companies going to do with all of their cash? Because intriguingly, despite the fact that we've now got buybacks back to pre-pandemic averages, company cash levels are extraordinary. Company free cash flow growth is very rapid. What are we going to do with all of this cash that's sitting on the balance sheets? What are we going to do with all the cash flow that's coming into companies? Are we going to continue sitting on it, or are we finally going to talk about spending it, which would ramp up expectations for economic growth going into 2022?
Precisely, Gina. So what is the positive way for companies to spend this cash? Would equity traders actually respond positively to investments in capital infrastructure and frankly, even higher wages, since it might attract better workers? Or are they going to penalize the companies for higher costs?
I think that investors are generally going to be optimistic with any form of outlay of cash. So even buybacks have been greeted relatively kindly. And frankly, buybacks reduce the supply of shares. So it makes sense that buybacks at this stage in the cycle, where demand is still ramping up, would increase prices for stocks. But I think the most positive sort of signal companies can give is in the form of capital spending. It's just been extremely low. Relative to sales, CapEx is now at something like 5.3%. Long-term average is over 6%. We should see close to 25% growth in capital spending over the next year to catch up with just the pace of sales growth. And companies have not yet given that confident signal to investors that they are going to spend for the future.
Gina, stay with us here. John Farrell, jump in with me here on this important message from Alan Zettner. John, to me, this is a wow note about a wow and unusual August. That's a shock, John Farrell, to go from 6.5% to under 3% now.
For 3Q GDP from Morgan Stanley, Tom, let's work through it together. We have anticipated a sharp slowdown in second half GDP growth, but look for a more even distribution across the remainder of the year. Payback instead has been front-loaded. So here are the numbers and here are the cards. Morgan Stanley revising 3Q GDP tracking to 2.9% from 6.5% previously. The forecast for fourth quarter GDP, Tom, remaining at 6.7%. The revision for 3Q implies full year, fourth quarter GDP of 5.6% this year. That's 1.4 percentage points lower than the Fed's forecast of 7% in its June SEP, the Summary of Economic Projections, and we'll get a revision to them, Tom, potentially on the 22nd.
And they mentioned the job market they see pretty much as stable as well. Gina Martin-Adams, there's the economist stepping in. How does that fold into your revenue guesstimates in the trenches of Bloomberg Intelligence, 6 floors below us here at Lexington Avenue?
It doesn't. GDP is an interesting indicator because I think we all look at it as an indicator for the economy, but it's relatively meaningless for the S&P 500, and I'll tell you why.
Please.
There are components of GDP, like inventories, for example. Inventories get drawn down dramatically. It contracts from a GDP report. It's relatively meaningless for S&P 500 revenue growth. The factors that really matter for revenue growth are things like, what's the ISM survey telling you? What are manufacturers telling you about the outlook for growth? What are durable goods telling you about the outlook for growth? What is consumer confidence and retail sales telling you about the outlook for growth? GDP is a reasonable indicator for the economy, but it's not particularly relevant for the S&P 500. What we drive for the S&P 500 would suggest that the employment report, for instance, tomorrow is significantly more important for consideration. What is the unemployment rate going to do, and how many jobs are we growing over the course of the third quarter? Those type of factors, as well as the ISM, the durable goods numbers, and interest rates, are much more meaningful to watch for the S&P 500.
Gina, got to leave it there. It's always good to hear from you. Gina Martin-Adams there of Bloomberg Intelligence. Tom, this note goes on to say that August is the month where we think broad activity slowed the most. So have we seen the worst of this?
Yeah.
Morgan Stanley thinks perhaps we have. And
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Storm clouds for the equity market. I think there are some headwinds that we need to be wary about.
I strongly believe that the fundamentals are not anywhere near as supportive as many are making out.
One thing you don't want to do is to be out of the market.
The consumer is very healthy. We're unburdened by debt. We're saving, and we have the demand. The demand is there.
Consumer confidence coming down a little bit, I think, is something to watch. It did that last year going into the fall, so that was a little bit of a head fake. But, confidence is important.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene, a simulcast on Bloomberg Radio and Bloomberg Television. The market's weather is green on the screen, but what we are looking at is rain in the streets, a weather crisis of Hurricane Ida across this nation, across the East, I should say, and John Ferro headed right for New York City. We are in a state of emergency.
A record rainfall, Tom, and I think the record that we previously made was about a week ago, and we've beaten that a week later. More than 3 inches at a single hour in Central Park yesterday evening, Tom.
Some of the context, John. Newark, New Jersey, you can see it just off the Hudson River here. Newark, New Jersey, a 90-year event. And John, what really struck me, the New York Times giving perspective, with more rain on a Wednesday than we usually get in a month.
6-7 weeks of it, Tom, in a single day. Just quite remarkable. And you asked a really important question in the previous hour, Tom. We call these once-in-a-century rainfall, once-in-a-century storm, and we seem to be doing that once every quarter in many ways, Tom. That's what it feels like, at least for a lot of people.
Lisa, we had 3 years of Bloomberg on the economy, which was the economics of the ocean, the study of climate change and such. And there it was, I'm going to say 12, 13 years ago, the Gulf of Mexico warming. And that affects all of our system in economics, finance, investment. The idea of global warming, it's here. It's irrefutable.
And how do we prepare for that? And that really dovetails into the conversation in Washington, D.C., as we just got the first flash flood warning for New York City ever in the history of the National Weather Service. And this came yesterday as those floodwaters inundated the city. How do the cities, how do the counties of the United States fortify themselves, and frankly globally, against some of these storms that are inevitably going to increase going out from here?
John, I look at where we are. Of course, the president will travel to Louisiana. Where we are in these markets, John, is an equity market that just refuses to ease the bid away.
And just a scheduling note, just quickly, Tom, the MTA acting chairman and CEO will be joining us on TV and radio, 8:45 Eastern. So we'll do that, Tom, in about 42 minutes' time. In the equity market, as you point out, Tom, a lift once again, up 0.2% on the S&P 500. Equities up by almost 10 points. Yields in by about a basis point to 128.19. And getting your attention, TK, Morgan Stanley, revising down their third quarter GDP tracking number to 2.9% from 6.5% previously. That is quite a revision.
It's a very nuanced note, John. Let's sit on this for a minute. It's a good precursor to get to Brian Levitt of Invesco Global, their global market strategist. I mean, John, it's a 90-day one-off. Since when do we see that? I'm not sure how Ellen Zentner can say it's a discrete quarter slowdown.
Well, let's talk about what they expected and what surprised them. What they expected, they anticipated a sharp slowdown in the second half, but they thought, Tom, that it would be evenly distributed.
Yes.
And a lot of it's come through the month of August specifically. But the ongoing problem that I don't think we've quite worked through just yet, and we've been on top of it through the whole of this year, demand's fantastic. Supply just isn't. And we saw that yesterday in the ISM. Tom, we've seen that in pretty much every single data point so far this year. And September was so important because we thought some of these difficulties might ease. They might heal. Will we see that in the data this month that we'll look back on next month? And I think that's why September in the eyes of so many people, Tom, is so important.
Claims 345,000. We see that in 28 minutes here as well. As John mentioned earlier, the non-farm payrolls tweaks for tomorrow from a 745-ish down to 725,000. Brian Levitt now with Invesco Global joins us. Brian, you see Ellen Zentner bring down a soggy August, no pun intended, but how do you adjust now at Invesco to the uncertainties of Q3, the uncertainties of Q4?
We always believed there would be a slowdown in economic activity. I mean, when you think about how disastrous recession was and how quick the recovery was, it sort of seems strange to me that investors were extrapolating that event to lead to a new higher sustained level of growth. And you heard a lot of talk about higher interest rates, a lot of talk about, you know, a prolonged value rally and deep and cyclical rally. And it was always likely a reversion to a mean, and the economy was likely to stabilize at a more modest level of growth. Now, it's happened more quickly because of the Delta variant. But the reality is it's not an economy moving to a new higher sustained level of growth. Nothing structural has really changed. And, you know, from an investment perspective, I would expect interest rates to stay relatively low for long. And I would expect structural growth businesses to be the prolonged outperformers.
Brian, you've made this point for so long now. You've talked about this return to trend growth, stick to big tech. Can I just do that through the NASDAQ 100? How do you expect people to do that? What do you actually suggest they should do?
Yeah, I mean, you want to look for those companies that can generate true earnings growth in a slow growth world, and some of them are going to be in the NASDAQ 100. And I think that there's going to be stock pickers who have shown an ability over time to be able to select those businesses. And so, you know, it's really about, you know, for active managers, it's about where do you find them? Who are the companies that are able to live through and take advantage of a persistently low growth world? And there's some pretty adept managers at finding those businesses.
Brian, when we talk about active management and parsing through business models, I wonder, looking at this note from Morgan Stanley, so much has to do with supply chain disruptions, that if companies can't get the goods, they can't sell them. And frankly, that is what's going to the lower GDP revisions. How much are you looking at specific spending plans to shore up supply chain lines, to increase resiliency in a just-in-time kind of world?
Yeah, of course. And you've seen a lot of businesses who have been able to actually do better in this type of an environment. So, you know, there's a reason why corporate earnings are as strong as they've been, because, you know, ironically or paradoxically, you found that some businesses have actually been able to not only survive in this environment, but take advantage in this environment. I think what ultimately you find out, you know, I think what investors were extrapolating, those that were really concerned about sustained high inflation, is that the demand, that recovery demand was going to persist forever, and there was never going to be in a moment where the supply side could catch up to it. I think what Ellen Zentner's note suggests, and what prognostications of slower economic activity suggest, is that, you know, some of this demand is going to moderate, and some of this, you know, this pent-up demand and this reopening trade is going to moderate some, and gives businesses an opportunity to bring back workers and start to rebuild supplies.
Mm-hmm.
It may take some time, but, you know, if you look at what's going on in the bond market is clearly not concerned about persistent inflation, and you know, I think we should take the bond market for what it's telling us.
Brian, I don't want you to talk individual securities here, but I did the math here, September 1-ish, on the 5 largest stocks of John Farrow's Standard & Poor's 500. Those stocks, this is ex-Tesla, are 22.9% of the index. It was beaten into me, Brian Levitt, at the dining room table, don't sell your winners. How do you deal with that from an institutional basis? If A, you're not in them, or B, you're in them, what do you do?
Yeah, a lot of people put that number around. They also point to the valuations of some of those companies, but you also have to remember that those are the companies that are generating earnings and revenues at significant multiples of what the broad market is doing. So, you know, it's not as if investors are bidding up businesses that don't have sound fundamentals and don't have structural advantages. You know, I would say that you want to continue to own those structurally advantaged names. And to our point earlier, about active management, you want to think about who are the next businesses that are going to emerge to be structurally advantaged in this type of an opportunity.
Brian, always good to catch up, sir. Things started to move your way over the last few months, that's for sure. Brian Levitt there, Invesco Global Market Strategist, looking for that move back to trend growth and looking for a better move, a better market on the NASDAQ and some of the big tech players. Tom, you talked about the S&P 500 being up so much. Let's talk about elsewhere. Emerging market equities haven't done anything all year. They're up by 1.7% year to date. Low single-digit gains in Japan, low single-digit gains over in China as well. The rest of the world hasn't delivered in the same way.
I'm gonna give credit to Zero Hedge. I can't remember where I saw this. The phrase, John, gigatex, that perfectly captures where we are.
Lisa?
I mean, come on, it's about what, 8 stocks?
Lisa, it's 8 stocks, and then over in the emerging market index, you're looking at some of the big Chinese names really, really weighing on that index too.
Yeah, you start to wonder in the emerging markets world whether it can outperform in a world that is such a spotty recovery from the pandemic. And frankly, I do wonder about the dollar here too. If the dollar strengthens on the heels of a tighter monetary policy just relative to the others, how do emerging markets outperform?
Well, this comes down to a big thing, doesn't it? How successful the Federal Reserve will be at delinking QE from guidance on interest rates. And Chairman Powell, as we discussed yesterday, and I'm sure you guys did over the last week, many people patting him on the back for somehow achieving that. I don't think he's done it just yet. It's one thing saying it. It's another thing it's showing up in the economic projections that they'll release, Tom, on the 22nd. And a lot of people think that might be compromised. That message might be compromised by the dot plot a couple of weeks away.
The dot plot's coming up, and I don't believe in it, but hey, it's going to be important. I agree with that. John, can we look to next year?
You want to do that now?
I want to do that right
22?
now. Here is next year. This is just a trade fair speech of the president of China, Global Summit of Trade and Services speech. But John, we're going to see a lot of this. We're going to see a lot of messaging by the Chinese leadership and particularly their president as they go to their important party meetings of 2022.
To what degree are we seeing something much more than just economic structural reforms?
Exactly.
Perhaps something described as some form of cultural revolution. Lisa, the lead paragraph of a Reuters story this morning, China told broadcasters on Thursday to shun artists with incorrect political positions and effeminate styles and said a patriotic atmosphere needed to be cultivated as part of a wider crackdown on its booming entertainment industry. There seems to be a lot going on in that single paragraph.
There is a lot going on, and it goes to targeting specific groups of people, and you start to wonder how much specificity this administration will have with some of their targets here.
From New York City this morning, good morning. Heard on radio, seen on TV, your equity market positive 0.2. This is Bloomberg.
With the First World News, I'm Rishka Gupta. A divided U.S. Supreme Court has refused to block a Texas law banning most abortions after 6 weeks of pregnancy. Justices turned away calls from abortion providers to put the law on hold while the legal fight goes forward. The vote was 5-4. The law's opponents say the measure will ban abortion for at least 85% of the patients in Texas. The remnants of Hurricane Ida ripped through New York, New Jersey, and across the Northeast. That triggered tornadoes, thunderstorms, and torrential rain. Streets were inundated, traffic was a mess, and train services were suspended in Manhattan Central Park. More than 3 inches of rain falling in just an hour. There have been at least 8 storm-related deaths. Bill Gross is talking trash about the bond market. In a post on his website, the one-time bond king said longer-term Treasury yields are so low that the funds that buy them belong in the investment garbage can. Gross also said that stocks could fall into the category of trash if earnings growth falls short of expectations. Ambassador International is buying medical equipment maker Hillrom for $10.5 billion in cash. Bloomberg has reported that the company rejected a $9.6 billion offer a month ago. Hillrom makes a wide range of hospital equipment, including stretchers, patient monitors, operating tables, and electrocardiographs. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
The July jobs report was strong.
This is an across-the-board favorable report.
More money, more hours, and more people working.
Wages up.
We're seeing our economy moving forward.
Unemployment down.
The unemployment rate declines by 0.5%.
But will Delta hit the brakes on the momentum?
We could still see the consumer become a little bit more skittish.
A lot of kind of negative surprises focused really on the Delta variant.
Tune in for the August jobs report, Friday on Bloomberg Television and Radio.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
Friday, a Bloomberg exclusive. HSBC CEO Noel Quinn sits down with Bloomberg's Francine Lacroix. Find the full interview starting at 5 a.m. Hong Kong time, Friday on the Bloomberg Terminal, and then at 6 a.m. and throughout the day on Bloomberg Television, Radio, and QuickTake. This is Bloomberg.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Brent at $72, it's not really something, a pause wasn't something that they would have necessarily gone ahead with. I will say, though, coming winter, if demand concerns are still there, I wouldn't rule out a month of pause. But yeah, for now, I think there's a lot of harmony in the group.
And Rita Sen there, always going to catch up with her, Energy Aspects Head of Research from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market of 0.2% on the S&P, advancing 9 points into the bond market, yields in a basis point at 128.52. And Tom, just a bit of news I want to pick up on. Some reporting here in the United States, this coming from CNN. The United Airlines have suspended operations at its major network hub, Newark, following the flooding overnight. So that's the latest on United Airlines from CNN. And ABC for that matter as well, Tom.
The weather report for today is actually very constructive, John, with no precipitation and maybe the sun glimpsing out. You've got to believe, John, it's water on the runway and also moving bodies around.
Working through some of the tough conditions because of the severe weather yesterday, Tom, as you indicate. The weather much better, much more constructive today.
No, we will see, and we'll move on through the week. Again, we've got claims here in 12 minutes, and we've got the jobs day at tomorrow. Right now, we digress on oil. It's easy to go macro. It's easy to talk about supply demand. I'm Rita Sen adding huge value there. Tamar Essner's in a different world at NASDAQ and Director of Energy Capital Markets. We're thrilled she could join us this morning. Tamar, I want you to first of all overlay your expertise at NASDAQ in capital formation of American energy with a small matter of a hurricane devastating Louisiana. How does your world change in the next 3 months?
Well, hurricane season, and we're not out of it, so there could be more storms on the horizon, tends to be in the short term bearish for oil prices because we typically see that the crude production comes online quicker than the refined products and the refineries. And so we see that for the storm recently, damage seems to be contained, but the problem is power and flooding that has prevented the terminals and the ports from coming back online so quickly. So we expect that products will be online in a matter of weeks rather than months, but this is still going to be short-term noise. Some of it will be overshadowed by the fact that, as you reported, OPEC will be putting more barrels into the market over the next month. And so some of that will take care of it. But when we get the inventory data on a weekly basis, we'll probably have a degree of noise going on. And so producers will be in a little bit of a confused state.
Lisa's got 14 questions on her expertise on high yield, but let me start with Abramowitz 101. How do you link your equity markets into the dynamics of energy high yield debt?
Well, first of all, I would point out that, month of August has been very volatile for oil prices, but not quite as bad for energy equity. So what I think that the market, at least from an equity perspective, and then I'll get into debt, is saying is that long-term equity investors aren't really so worried about demand. They're sort of saying oil prices are consolidating after 40% gains so far this year. The markets are looking really good. Companies have been able to buy back debt and improve their balance sheets. Companies have also been very robust at announcing dividends over the past couple of weeks and months. And so that suggests that there will be a degree of capital discipline, which should curtail the degree of shale production growth in the years ahead. So I think that the outlook from both a debt and equity perspective is pretty constructive for U.S. energy producers.
Tamar, as we take a look at storms, and storms really have been the focus of a lot of this show, I do wonder how much some of these companies have to give a nod to the changing infrastructure, not only of the world, but of the view on climate change and the view on fossil fuel production, the fact that ESG considerations are becoming an increasingly important part of a lot of portfolios. How much are they looking to try to spend to either offset carbon emissions, to either invest in clean energy, not only from an ESG investment standpoint, but also to diversify their streams of revenue?
Approaches. And so what I think, we're talking about investors wanting more cash returns from energy producers. That is very much the case. And now they increasingly want a cleaner barrel as well. So over time, we think that as this energy transition plays out, as ESG concerns only grow in their intensity, investors are going to want a cleaner barrel of crude oil. But energy will continue to need oil as part of the mix, even in a decarbonized future going forward. So I think there really is a role for energy producers, but the cost of their barrel will go up if they have to bring down the emissions profile of each barrel produced. So over time, that should privilege the lower cost producers that have a cleaner barrel and put a bit of a burden on those that don't.
Tamar, we've got to leave it there. It's always good to hear from you. Thanks for joining us. Tamar Essner there, NASDAQ Director of Energy Capital Markets. Let's reset. Jobless claims about 7 minutes away. Payrolls coming tomorrow morning. And Zeta and Morgan Stanley making some headlines, Tom, with their third quarter GDP tracking number of 2.9%, down from 6.5% previously. That is one heck of a cut to third quarter GDP.
An extensive note, and she folds in the labor market, which she sort of says is pretty much on track. And, John, I look at a 2.9% GDP. I don't care what the timeline is. And then I look at the chart on claims. We're not going to show it right now because we're time compressed. But, John, it's still the most elegant chart I have. Claims are persistently reducing to a better outcome.
To be clear here, fourth quarter GDP remains at 6.7%.
That's a boom economy.
The bulk of this slowdown, Lisa, very much in 3Q, and a lot of that very much in August.
Yeah, having to do with the Delta variant, having to do with supply chain disruptions. A lot of that, she said, stemming from actually auto production and auto sales, which actually slowed down materially. She said that perhaps some of that slowdown had been bottoming out. You do wonder, though, John, in this kind of economy that is so stop and start and stop and start, how much a storm could disrupt things. I mean, that's what we saw actually affecting consumer sentiment on some surveys. That's what people were saying, or how much it affects other peripheral demand or coming back online of the labor force. You do wonder incrementally how much these things matter.
I've got Morgan Stanley at 725, their estimate for payrolls this coming Friday, Tom. The median estimate is 725. The range is from at the top end of 1 million to the low end
so
of
hard to
400K, 600K separating the top and bottom estimate going into payrolls, Tom. And we've talked about this so many times. Every single first Friday of the month, seemingly wide for that range of estimates.
I take a 3-month moving average. You know what? We're moving towards a fully employed America. The raging debate is, when do we get there? And, you know, that's what we do here. But, you know, Steve Rasciuto, John, can talk about that.
I'm looking forward to that.
I'm sorry. I think it's just one data point.
We've got to do a couple of things. Jobless claims are about 5 minutes away. Then it's on to payrolls Friday, tomorrow morning. Your estimate, your median estimate in our survey, 725,000. We'll get some commentary from Steve Rasciuto, Mizuho Securities chief U.S. economist. We'll do that next. Here's your price action this Thursday morning. Going into that jobless claims number, equity futures this morning, a positive 9 points on the S&P 500, up around about 0.2% as we kick things off in September with a small day of gains on the S&P 500, up by 0.03% on the S&P yesterday. Outside of this, in the bond market, yields are lower by a single basis point to 128.35. The euro not doing much. Euro dollar at 118.42. And crude, WTI, 68.88.
Not doing much.
Crude up 0.4%. Where's the Dow, Tom?
It's up 50-some
there we
points.
Go.
It's surging.
There we go. Surging. A full 0.16%.
When I went into the business, a 50-point move was large.
From New York. That's why we don't do it anymore. This is Bloomberg.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Jobless claims in America are about 10 seconds away. From New York City this morning, good morning. Alongside Tom Keene, Elisa Bravis, I'm Jonathan Ferro. Your equity market going into those jobless claims numbers shaping up as follows. Up 8 or 9 points on the S&P, advancing around about 0.2% on the S&P 500. Into the bond market, yields lower by about a basis point on 10s to 128.35. Here's the number, 340K, the estimate 345, the previous number 353. Tom, I'll wait to see if we get some revisions here, but 340,000 initial jobless claims, that's the print. The median estimate 345, the previous number 353.
It's a good number, and it's part of the trend that we've seen. And you're right, we've got to get in the revised data, maybe a little bit later coming out with the storms. Who knows? John, I'd also note on productivity, which is it's a quarterly data point, unit labor costs stay elevated. And that interests me as well at 1.3%. There's some real dynamics there, but nevertheless, it's one of those inflationary impulses that gets your attention.
Yeah, just to repeat that then, Tom, 340,000 is the print, 345 was the estimate, 353K. The previous read. Your market not doing much off the back of this, up 0.2% on the S&P. Outside of that, into the bond market, your yield down almost a basis point to 128.69 going into tomorrow. And you talk about the dynamic of the moment in this economy, Tom. Look, for me and for many other people, it hasn't really changed. Demand has been pretty stellar considering. Yes, we've seen a little bit of a soft patch through the month of August, but it's all about supply. Can it meet that demand story?
Right.
And I keep going back to that ISM print from yesterday, Tom. I think that's really, really important. Again, it came up the same story. It was repeated through the whole report. Demand is great. We have a supply problem. And you go through the industry comments, Tom, that they give you. Production limited due to supply issues. Port delays, sea container tightness. Sales continue to be strong. Persistent supply issues. Business strong. Part shortages. Our largest business constraint. A backlog in climbing supplier parts and manpower challenges. Tom, you just see that repeated every single month and it hasn't really changed.
Let's go right there. Revisions out now. They're a non-event as well. Stephen Rasciuto is hugely qualified at Mizuho to talk about the American economy. And Stephen, I really want to take advantage of your encyclopedic knowledge and go where John Farrell was going, which is industry by industry. And to me, the supply dynamic seems to be colored by the American automobile industry. Discuss that. How are autos right now for you? An asterisk, an outlier, or are they part of the American economy?
Well, they are part of the American economy. They're an important component of the American economy. They have been declining in value as a percentage of the overall economy for years, as is most of manufacturing. But you have to remember, the automobile industry is a pervasive product. I mean, when you consider all the components going into them, whether it be glass, steel, electronic components, rubber components, plastic, leather, vinyl. I mean, it's a huge supply chain that's involved when you're talking about building automobiles. And therefore, its multiplier in terms of the economy is still very, very important. And when you see a retail sales numbers in autos like we did yesterday afternoon of a big drop down in sales to about 13.1 million units from about 14.8 million units, you really get the sense that this is where the economy is losing some of its momentum. And it is related to the supply chain because this is what's really happening in terms of the auto space.
Stephen Rasciuto, a slow news day. Let us make some news right now. Are you going to reduce your Q3 GDP statistic?
No, I mean, I don't get into that game of trying to, fine tune it once we have all the data, the key source data coming out, because still lots of moving parts in there. I mean, I go back to the days when a couple of people from the Bureau of Labor Statistics who did these components were caught for insider trading, trying to trade on the GDP number. And
John
the net
does
result
that.
was, excuse me?
John does that. John trades off the GDP number. We've seen him do it.
And the net result is they made absolutely no money because they couldn't figure out what the numbers were because they weren't trading inventory. And that's really the key issue. They, unless you know the trade and you know the inventory numbers, it's really, really hard to peg down the GDP number on a key source data related basis.
That said, the direction matters. And I want to go back to that Morgan Stanley call of Ellen Zentner, where they downgraded the third quarter GDP to 2.9% from 6.5% previously. David Smith from Regions Bank said this is actually significant. And the reason why is because there isn't necessarily a material impact on the full year GDP, but there isn't a mark up in the GDP for Q4. This is not delayed growth. This is lost growth. And I wonder how much that is starting to factor into people's assessment of this recovery.
I think you're 100% correct, and I think that's the real key factor there, is that this is not going to be growth that's going to be reversed back. When I look at the numbers that they've just put out, and they look at the big drop that they're anticipating in Q3 and then the bounce back they're anticipating in Q4, I'm not so sure you're going to get that bounce back in Q4. There's a lot of people who keep on talking about pent-up demand in this economy. There isn't really any pent-up demand in this economy. So you might wind up seeing marking down third quarter GDP, really marking down the year number in particular, and getting people to really look at their 2022 estimates and begin to realize that those numbers are much too high. We're still much lower than the consensus on 2022 numbers. We're in the 3.5% area, and most people are substantially higher than that. And that's where we think the risk is from the kind of losses that you're talking about here for the third quarter.
Meanwhile, we're looking at a labor economy that still hasn't recovered, and we're looking at millions of people still out of work. The why, though, behind it is less and less clear as a lot of the economy reopens. What are you hoping to find out from tomorrow's jobs report to understand more the trajectory of what's keeping people away from filling all of those jobs, a record number of them that need to be filled?
Well, I think what you're going to discover is what's true about most of these jobs, is that people are looking for a specific qualified person to fill a job. If you're going to be in a work from home environment for a lot of these jobs, and I'm not saying a lot of the service jobs are work from home related jobs, but outside the service component, you're looking for a person who is plug compatible. You put them in and they start working ASAP. Not in an environment when you're working home where it's easy to train somebody and bring them on board. So the net result is, I think this work from home environment is one of the factors that is limiting the ability to find that specific worker that we want, because those workers are rarer. In an environment where people are working in offices, there is the ability to train, get people up to speed. Now we have less and less of that as an opportunity. So therefore, you really need to find that unique person, and that becomes harder and harder to do. It's finding a needle in a haystack.
Steve, what's the dynamic on service sector right now? We mentioned earlier that the gigatechs are out 22.9% of Standard & Poor's 500. What's that mean for our service sector versus goods sector?
What it really comes down to is we're driving everything from a productivity standpoint. I know you looked at the productivity numbers here and the unit labor cost numbers, and you talked about the uptick in the unit labor cost numbers that we've had here. The reality is, when you're looking at the productivity environment of the economy and the increased productivity that has been pushed into the economy as a result of the COVID-19 environment, it's understandable why you're seeing what you're seeing in terms of the growth-related portions of the economy, in particular in the tech space, because we're relying more and more on that technology in this work-from-home environment. And as you look at more and more companies who are sitting there saying we're delaying openings or making it easier for people not to come back to the office after Labor Day or in October, the net result is you're going to demand more and more on this type of technology, and that's going to continue to drive the demand up for that product. And so I think it just hits very, very much with the changes in the underlying dynamic that are unfolding as a result of the COVID-19 mitigation strategy.
Meanwhile, throughout the show this morning, we've been talking about mitigation efforts to some of these storms that are historic. We saw what happened with Hurricane Ida over in Louisiana. In New York City, the weather system actually issued its first ever emergency flash flood emergency warning. Not the flash flood, excuse me, a warning, but emergency warning, trying to look at how people are possibly going to die. What is the impact on GDP, on growth, on the resumption of people back into their jobs as a result of some of these storms?
You know, I will tell you, when we go back and look and trying to ascertain the impact of any particular storm, you know, you can go back and you look at Katrina, you can look at Sandy, and those were much, much bigger in magnitude. I'm not arguing that the suffering going on by people right now isn't real and isn't important. It is. But the magnitude of it in terms of the population, the breadth of the economy involved in that are substantially greater. I don't expect to see much of a real statistical impact at the macro level. At the micro level, to a certain extent, you wind up seeing a lot of the expenses that have come to recover from that wind up driving the economy back to fill that void very, very quickly, which is why statistically we don't see it on a quarterly basis. You'll see it in some of the regional monthly numbers, but you won't see it in the quarterly data.
Hey, Steve, good to hear from you. Don't trade GDP. The message from Steve Rasciuto there of Mizuho Securities, the chief U.S. economist. Coming up on the program at the top of the hour, 9 a.m., the Open. We'll catch up with Chris Harvey of Wells Fargo. Fargo. The big bear on Wall Street becomes the big bull on Wall Street, and he's looking, Tom Keene, for 48.25 year end on the S&P 500.
This is tough, John. These guys are class acts. They capitulate. They're wrong. I'm watching Tobias Lefkowitz, John. I'll be blunt.
Of Citi.
Yeah.
To see if he does the same thing. And I think what's interesting here, characterize Chris as the big bear on Wall Street. That's not how he started the year, Tom, because the forecast of 3,800, 3,850, 39, pushing 4,000, that was bullish when these forecasts were put together at the start of November through November. And then we had the vaccine news, and this market, Tom, just ripped. And just ripped and ripped and ripped. And we always talk about risks, and I often say, some of the risks that we don't talk about enough are upside risks. And that's been the story of this equity market into this year.
I would say in modern business media, John, there's too much certitude. There's too much, well, you got it wrong, you got it wrong. In the old days, it was real simple. Everybody got it wrong often, and you adjusted as you went, and people had a humility about it. They understood it. Now it's different.
Chris has a ton of humility, Tom, and
he does.
Through the
He's been
process.
great about it.
And I'll talk to him about that, and also talk to him about why he's going from 4,800 maybe at the end of this year, and maybe have a down year next year as well. We've got to work through some of those issues.
His Dow quote is stunning.
I will ask for his Dow year-end forecast.
Please do that.
Just for you, Tom.
Please.
Tom Keene, Lisa Bravitz, Jonathan Ferro. For our audience worldwide, here in New York and beyond, stay safe after the rainfall of yesterday evening. From New York City, a better day ahead. For all of us, I hope. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The toughest restriction on abortion in the U.S. will stay in place for now. A sharply divided Supreme Court refused to block a Texas law that bans most abortions after 6 weeks of pregnancy. Abortion providers had asked that the law be put on hold whilst the legal fight goes forward. Lawmakers in New York have extended the state's freeze on evictions and foreclosure through January the 15th. It was supposed to have ended 2 days ago. The move will provide relief to homeowners, renters, and small businesses that have struggled during the pandemic. China is using talks with climate envoy John Kerry to push the U.S. to an improvement in the broader relationship. The Chinese foreign minister told Kerry in a video call that Washington must take the first step to improve ties that got worse during the Trump administration. Meanwhile, Kerry said China must do more to curb its carbon emissions. Regulators in Ireland have fined Facebook's WhatsApp $266 million for failing to be transparent about how it handled personal information. The Irish Data Protection Commission is Silicon Valley's main privacy watchdog in Europe. It has at least 28 investigations open targeting tech giants such as Apple and Google. Bloomberg's learned that at least two of China's Evergrande's largest non-bank creditors have demanded immediate repayment of some loans. That adds to the liquidity pressures of the world's most indebted developer, and it's the latest sign that Evergrande is struggling to make good on $305 billion of liabilities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 100.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever, are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg Surveillance. Good morning, everyone. Lisa Bramwitz and Tom Keene on a truly historic day for New York City. We're not going to waste time now with the statistics, but to be very serious, 8 deaths are reported by the New York Times and other organizations here on building collapses over historic rain. With that note, we get immediately to someone with the largest headaches of the morning. The acting chairman, the chief executive officer of the MTA, Jenna Lieber, joins us this morning. Jenna, where's your biggest headache at this time, 8:48 in the morning?
Well, the subway system is coming back. It's incredibly resilient, and we've got, operating service in most areas of the city. It's obviously got some limitations, but we're putting Humpty Dumpty back together again. And bravo to the crews that worked throughout the night to do it. There's one area in the 14th Street area of West Side of Manhattan where there's the pumping still going on in order for us to restore service to that very important line, but we think that by mid-afternoon, we're going to have most of the lines really back in full functioning for an evening commute. So that's exciting.
So you're telling me that we will see an evening commute?
Yeah, I mean, fortunately, a lot of people elected to work remotely or stay at home today, so a little lighter than usual. But we're going to be able to move people on the subways and on the bus system, which performed heroically. Great bus drivers rescued tons of people, moved them home last night. The commuter railroads is a little spottier, Tom. Metro North is really out of business today because in part they're in addition to mudslides and trees and so on, they had some hits on their electrical infrastructure. Long Island Railroad, however, really back in action. They are, they've got most branches operating. Fort Washington branch still struggling, but Long Island Railroad is mostly in operation.
And Lisa, Joe Ryan just reporting the death count has moved from 8 to 9.
Yeah,
Lisa?
catastrophic flood, and that's the flash flood emergency warning that came out that really highlighted that to death could be imminent. I'm wondering, Jeno, this is the second time in 2 months rather, that the subway system has faced flooding like this more extreme than the last time. What is the MTA doing to prevent this from happening again?
Well, after Superstorm Sandy, we invested a ton in coastal resiliency, and our underwater tunnels, we've got 11 of them, all been rebuilt, the pumping infrastructure upgraded and so on, and they perform fabulously in this emergency. But what we're seeing now is in the era of climate change with these extreme weather events, even the higher elevations are experiencing this flash flooding. So we're going to attack that even more. The big problem is when the street drainage and the sewer infrastructure gets overwhelmed, gravity takes water into the subway system. The subways are not a submarine. And you know, it's not gonna ever be perfectly dry. But we're gonna start attacking these higher elevations as well.
And Jeno, we're looking at a situation where this is likely to become more and more frequent, and these fortifications have to happen quickly. Is the MTA sufficiently funded to make some of these adjustments at the same time that ridership is down, at the same time that the city is recovering from a pandemic, and getting people and ridership back up to where we were before?
Well, I mean, the first thing is that this has to be done in tandem, as I said, with the city of New York, which controls the sewers and the street level drainage infrastructure. So that's part, we have to do this in partnership. We have a $50 billion capital program that has a lot of resiliency investments in our yards, in some of the low-lying areas. But I think that there are some things we can do in tandem with the city to deal with this flash flooding risk, which is, you know, new to this era of climate change.
One final question, Jeno, if we can, and it is away, I believe, from this crisis, and great respect, as you mentioned, to the bus drivers particularly. You've had a changing of the guard in Albany. Will you stay and support the new governor, Kathy Hochul? Do you have any understanding of that relationship, the fractious relationship now with the MTA and the capital up the Hudson River?
You know, I've had the opportunity to meet with Governor Hochul and talk to her. We've been in touch through the night. Our teams have been working together. She was a local official before she was a congresswoman and a state official. She gets emergency management. She displayed that just a few days ago when she came down to the city after we had a hit on the MTA's subway operation. You know, she's a great partner for the MTA on these kinds of emergency management issues and more broadly. So we're looking forward to working with her very much.
Jeno Lieber, to you and all of the MTA, thank you so much. He's the acting chairman and chief executive officer as well. You know, we really got to know Lisa Kathy Hochul within this pandemic, the lady from Buffalo. And what's so important there, what Jeno said, is unlike so many people, she really started in the granularity of Buffalo and Erie County politics.
Yeah, she was definitely sort of more of a behind-the-scenes player, and perhaps that will actually add to her advantage. In this particular scenario, she wasn't necessarily allied with former Governor Cuomo. I just want to say, Amy Morris of our radio studio gave out this note this morning that I thought was fascinating, showing that the traffic guy is watching traffic in the New York area and showed a map of that traffic. And it's just red, red, red. Basically, slow, halted, slow, halted. People are not able to move around. And you just wonder what storms like this do, how quickly we can recover, really will determine how quickly a lot of things and businesses can get back up. I mean, it's such a perilous moment.
Rob Carolyn saying it's a 500-year storm, so I'm set up for 2,625 or something like that. At least I've got to mention it. Dow futures up 100 points because you know John Farrell's not going to mention it in the next hour.
No, I will say, though, those jobless claims I thought were interesting in that they came in pretty much very close to expectations. Remember when they were all over the map? It seems like they're getting closer each time, which means that we're getting into a more normal situation that is more predictable. And I do wonder, if you start looking at the estimates, the analyst estimates, they're actually coming more within range than they have in the past. I wonder if people can get more conviction around some of the labor market data, if it's stabilizing enough to create a trajectory outward from tomorrow's report that we get.
We change gears here. This is something to ponder through the morning. Bridgewater, a hedge fund associated with Mr. Delio, a California county of $21 billion of pension dollars, is considering exiting Bridgewater's efforts.
Interesting.
Off of, quote, weak returns, unquote. That's just breaking.
Wow.
We'll see if we see that more. So you'll hear about that more through the day. Maybe Shonali Bassick has some wisdom on that as well. One of my favorite people, Ambassador Pickering of Hills & Company in the 12 o'clock hour here. Please stay with us. Thank you for our technical team for making it happen today. This is Bloomberg.
I'm Jamie Maggio with an exclusive U.S. Open update for Bloomberg TV and radio from Tennis Channel. 3 major champions were the headline makers on day 3 at Flushing Meadows. Sloane Stephens famously lifted the trophy in New York 4 years ago, and the 28-year-old looked back to her best as she dispatched Coco Gauff to move on. Stephens outplayed the teen phenom, who hit 25 unforced errors in the loss and managed to generate just 1 break point.
Game 7, Stephens. 6-4, 6-2.
3 breaks and 11 winners, enough to put Stephens into the 3rd round for the 8th time in her career. But she'll need to continue playing at the top of her game. She could face defending champion Naomi Osaka in the 4th round. And don't forget, you can watch all the action from the Open every night on Tennis Channel. I'm Jamie Maggio.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Counting you down to Payrolls Friday from New York City for our audience worldwide. Good morning, good morning. 30 minutes to go. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
From New York, we begin with the big issue, counting down to payrolls.
The payrolls report.
Total non-farm payrolls.
One more month of non-farm payrolls data.
We need to see the payroll report.
Not sure what we're going to see tomorrow.
The question on the wall of worries certainly would be on the upcoming jobs report.
Really what matters is the strength of the labor. The Fed needs to see the payroll report. They need to see all-around progress in labor participation rates.
We're likely to get more certainty and confidence.
If you get somewhere in the world of 6 to 800,000, that lays the grounds for a September meeting that could be very consequential.
The Fed is keeping a really close eye on the employment market.
It really starts with tomorrow's jobs report.
7:25 is the estimate in tomorrow's jobs report. Joining us now to discuss is Tallbacken's Michael Purvis, Seema Shah of Principal Global Investors, and Chris Harvey of Wells Fargo. I want to start straight away with Morgan Stanley and Adam Zettner slashing third quarter GDP forecasts and running the following. We are revising down third quarter GDP tracking to 2.9%. from 6.5% previously. Our forecast for 4Q remains at 6.7%. We anticipated a sharp slowdown in the second half, but looked for a more even distribution. Payback instead has been front-loaded. I want to come straight to you on this, Seema. Your view on the third quarter. We've got 1 month left of it. Have we seen the worst of it through August?
Yeah, I think we have, and I think with the Delta variant, hopefully it looks like it's peaking. We should see some confidence returning, so we should see the worst of it. I should say though that I think the second half of the year was always panning out to be considerably weaker than the first half. Now I know there's there's all the toying between the Q3 and Q4, but none of this should be that much of a surprise, and I don't think that the market is going to be too surprised by the idea that growth is starting to slow down.
Does that resonate with you, Chris Harvey?
It does. So our economic team has really been on top of things. They cut their numbers a while ago, and this is something that I think they're a little bit. They were early, others are late to the party. So we've already dealt with this. We've already seen this react in the equity markets, and as we go forward, Delta is beginning to get less bad. We're running into a situation where the supply chain is beginning slowly to improve. And as we look forward in time, we do think equities do melt up and do start to move higher.
And that's the question, isn't it, Michael Purvis? Does it justify a move we've already seen in the bond market when we were testing 112, and now I'm looking at a 10-year, pushing 130 again?
Well, look, I think to both of my co-guest points, two things. One, the City Surprise Index for economic data has been trending ever lower throughout the year here, right? But at the same time, if you look at the Q2 revenue beats, the revenue beats for the S&P 500 were the best they've been in years, right? So there's an ability for corporations to sort of navigate the economic weakness. And the other point I would make here is that if a lot of this weakness that we're seeing right now, again, it's relative weakness, if that ultimately means that some demand is getting pushed into 22 or 23 even, that to me is exactly what equity markets need right now. We all know GDP in 2021 is broadly extraordinarily good, even if it's not as good as it might have been. What we need to see is a stronger 22 and 23 and not a cliff falling off.
Well, Michael, that's the question, isn't it? Is it growth lost or is it growth delayed? Let's head straight to Carl Riccadonna of Bloomberg Intelligence on this. Carl, I'd love your view on this. Is it growth lost or growth delayed?
I would say, Jonathan, it's going to be growth extended. So while we see some drop off in things like the City Surprise Index, consumer confidence earlier this week, there is still such a huge backlog of unfilled orders out there, and inventory levels have been depleted to such an extent that is going to provide a very solid pillar or backstop for production over the next couple of months. So while we could see a drop off in, perhaps final sales as we look at the GDP numbers, that inventory replenishment story is certainly enough to boost the growth figures for the next couple of quarters, especially in sectors like manufacturing, transportation, all those types of categories. That being said, as we look ahead to tomorrow's numbers, first of all, when we saw the July report, we could see that there were some unusual factors inflating the numbers. So a big rebound in leisure and hospitality inflated numbers by more than about 300,000 actually, and an unusual outcome for education sector hiring, which is kind of strange seasonals in a very unusual year. If we strip those two factors out, the underlying momentum in the economy in July was about a third of what that headline payroll would have you suggest, so closer to about 340,000. I think we potentially have the risk of a downside print tomorrow as all of these unusual factors kind of get depressed in the number. We've seen some pullback in things like open table bookings at restaurants and transportation, hotel bookings, airfares, all those sorts of things. So what I'm looking for tomorrow, solid underpinnings in the factory sector and the less volatile sectors, but a little whiff of that the lowercase k that we saw last November and December when we saw the next wave of the virus and some of those very volatile sectors showing some pullback.
And this would beg the question if it tells us anything about underlying demand then, Carl. People will be thinking about that after what we saw with the ISM yesterday. Let's work through that data together just quickly.
Sure.
This was the industry commentary, Carl. Production limited due to supply issues, port delays, sea container tightness. We just see it again and again and again. Demand is great. We've got supply issues still.
Exactly. So that goes back to the backlog story, and those backlogs need to be alleviated unless they're ultimately canceled, and I don't think they will be canceled because we're still in the early stages of an economic cycle. So these backlogs for production are going to really drive growth through the back half of the year, certainly at a slower pace than we saw in the first half, but still with significant momentum. The Fed realizes this, but the question is, if we start to see a slower pace of hiring as the reopening trade is a little bit weaker in the Delta variant and some of these educational seasonals get washed out, will the Fed still have the confidence that we've hit substantial further progress on the labor market come November, December of this year? And I think there still are some maybe reticent doves on the committee who are holding on to those beliefs, but just not shouting into the storm of hawkishness that we saw around the Jackson Hole Symposium.
Carl, thank you. As always, Carl Regadana, thank you very much. I want to turn straight back to Seema Shah of Principal Global Investors on this. Seema, if we get some data that misses to the downside, but it's largely because of supply constraints, how do you expect the Federal Reserve to respond to that?
I mean, I think it puts September taper, it pushes that out at least to November. We've seen the supply chain issues. Everyone knew that they were going to come, but I think they've been a lot worse than expected, and certainly that's behind that Q3 downgrade for GDP. So I think the Fed, they're holding on to it. They know that it's going to disappear, but I think that they still need to have a little bit more confidence in the growth outlook before they're willing to actually start that official taper. But importantly, look, for the market's already priced in. They know that taper is going to happen. So the question of September, November, I don't think is going to be that disruptive.
Well, the question for this market is whether they can de-link any decision on tapering from any guidance on interest rates. And Michael Purvis, there's been some confidence that they can do that, but I just wondered to what degree that will be compromised by the dot plot that we ultimately get on September 22nd.
Yeah, look, I think when you think about that sort of surprise two hike in the June dots, how is that going to be framed out for the September FOMC? It's given the weakness in the economic data and whether one of those things comes down. I think Powell, one way or the other, he seems to really keep gravitating and being pulled back to the super dove sort of approach here, right? And I won't be too surprised to see maybe those dots on hiking expectations in 23 weaken a little bit in September there, and for him to keep sort of this, yes, we're going to be tapering and continue to be a bit vague on the timing there. Yeah. And I think the vagueness is deliberate because they're looking at financial conditions, and tapering is a wonderful way to kind of like help manage through those financial conditions and keep them consistently pretty strong. He's going to solve for strong financial conditions there, and this pace of tapering will I think be a function of what other stresses we see elsewhere in the markets.
And in supply, on the supply side of this economy as well, from the ISM yesterday, this quote: the new surges of COVID-19 are adding to pandemic-related issues, worker absenteeism, short-term shutdowns due to parts shortages, difficulties in filling open positions. Katie Lyons, how many times have we heard that over the last several months? This is meant to be the month some of this gets addressed.
Yeah, in theory, John, we'll see if that actually indeed does happen. Of course, that we are seeing not just employers grappling with the virus, but pretty much everywhere else. And when it comes to employers, we do seem to be getting news on that front each and every day. You have UBS now telling people if they don't want to be vaccinated, they can apply to work from home. Apple asking employees to submit their vaccine status, though not mandating that they get the shots, which is something many of its peers in the tech industry have done. And while we're talking about shots, it's no longer just about getting the first inoculations. There's the booster conversation as well, and Moderna has now filed for approval for a third shot of its inoculation, just like Pfizer has already done. And in the meantime, the Delta-fueled surge in cases continues on. The question is whether this most recent outbreak will affect the economic trajectory. On the job side of the equation, will we see it show up in that August payrolls report tomorrow, specifically in terms of the recovery in services industries like leisure and hospitality, where, as we all know all too well, jobs have been hit the hardest during the pandemic. And then, of course, it's not just about jobs, but consumer behavior and spending and those supply chain disruptions you were just speaking about, John. All of that has implications for growth more broadly, and we have seen U.S. GDP estimates come down over the last month as the COVID case count has gone up. Back in July, 6.6% growth was expected by economists. Now we're down to 6.2%. Morgan Stanley, just the latest to make adjustments.
Kelly, thank you. But the equity market bulls are still bullish. Chris Harvey now is one of them. Chris, you and I have gone back and forth about a price target over the last few months. I have a ton of respect for how difficult it is, Chris, to make a forecast. You're now at 48.25 on the S&P. I'm much more interested, Chris, in the process now for you and the team at Wells. Right. How do you get to 48.25 year end?
So, John, there was a number of different components that went into this, but probably the most important thing, and the thing I want people to take away, is we looked at past history, and we said, how many times have we seen the equity market up double digits in the first 8 months of the year? And then what happens in the final 4 months of the year? And what we found out going back to 1990, there wasn't one single instant where the equity market went down. It was only up as much as 1% in one instance, but as much as 13, and on average, it was up 18%. And that occurred 9 times going back to 1990. And often that occurred in the first year of a presidential's reign. Okay? And when we look at that, we say, that's really interesting. But more importantly, what's going to get us there? And what's going to get us there is we still think EPS numbers are too conservative. We think EPS numbers are going to go higher. Our estimates are about 7% higher than the street. And we think that numbers will be revised up. Ultimately, yes, the supply chain is not at our kink, but it's improving. The thing that you were talking about before is demand. As long as demand doesn't disappear, we're going to have better prices and volumes will fill in. And ultimately, that's going to show up in earnings, and that's going to push equities higher. What we said at the beginning of the year is that price will follow earnings, and we think that's going to continue to occur. And that's how we got to 48.25.
Chris, before we turn to another subject, I'm not in the business of calling out strategists. Yeah. This is 1,000 points north of where you were coming into the year. And I think for any investor, you always try and be right more times than you're wrong. That's ultimately the goal, isn't it? Right. What did you learn coming into this year? And what were the mistakes that were ultimately made, if you would call them that yourself?
Yeah, so John, as I've talked about, we've been very transparent. We've been very forthcoming on what we were thinking, what we were looking at. And what we thought is you'd see double-digit returns in small caps. You'd see double-digit returns in financials. You'd see double-digit returns in a lot of the cyclical trade, which is what you saw. What we didn't see, what we didn't appreciate, is the Uber cap trade. Uber caps performed much better than we thought. That was partially related to where interest rates are right now. What we didn't appreciate is what the Fed would be doing. Right? The Fed owns close to 25% of the Treasury market. The Fed has been buying $120 billion in bonds per month, and it's doing something we've never seen a market participant do before. Doesn't care about price, doesn't care about liquidity, doesn't care about market conditions, and it just continues to do that, which has helped drive price down, help drive price up and yields down. And so now what we see is that duration component play out through the capital markets much more aggressively than we ever would have thought, and it's expressing itself in the equity markets through Uber cap and Uber cap outperformance. which we think is now overstretched or overbought, and we think that's going to be a source of funds as we go forward in time.
Chris, we've got some time to build on this. Chris Harvey's going to be sticking with us alongside another equity market bull in Michael Purvis and Seema Shah of Principal Global Investors. Coming up on the program, President Biden's foreign policy dominating the spotlight, even as the administration continues confronting new hurdles on the domestic front. That conversation will be next. About 15, 16 minutes away from the opening bell in New York City this morning, with equities doing okay. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I still think the path of least resistance for that legislation is that we do have a Democrat reconciliation package following the bipartisan infrastructure plan, but a much watered down one. Let's call it $2 trillion with up to $1 trillion of tax increases, kind of the plain vanilla ones.
Mounting headwinds gripping D.C. with uncertainty weighing on lawmakers, cracks emerging within President Biden's own party as infrastructure talks, the debt ceiling push and tax hike talks continue to divide Congress. All this coming as a group of progressive Democrats call for a new Fed chair. For more down in D.C., our Washington correspondent, Bloomberg's Anne-Marie Hordern. Morning, Anne-Marie.
Morning, John. Well, September 2nd, so you have that back-to-school feeling in Washington. And while foreign policy has certainly weighed on the administration and the agenda over the past 2 weeks or so, there does be this feeling that things are going to start shifting towards the domestic front. So you outlined a number of them. The first, I would say, is infrastructure. Already we're seeing that big budget resolution, that reconciliation package, $3.5 trillion, the details of that emerging. What we're hearing from the House Ways and Means Committee is that most Democrats agree with the president in terms of raising the rate on capital gains, but about a third of them do not agree when it comes to raising the rate on investments. There's going to be a ton of details we're going to be sifting through in terms of where the divide is on the Democrats when it comes to that budget reconciliation in the weeks to come. Then there's the perennial game of chicken in Washington, the debt ceiling. Yesterday, we had White House advisors reaching out to Senate Democrat aides to talk about what they view as the right approach in terms of the debt ceiling, and they want this to be bipartisan. Republicans and Democrats take the blame for spending, and they both should sign up for this. But already we heard from Senator Mitch McConnell that he said that is not going to fly. Now, we need to remember, Treasury right now is using extraordinary measures to pay the U.S. government bills, and some estimates, John, say that can end on October 1st. And then finally, what is critical to a Bloomberg audience and those on Wall Street is who will be the next Fed chair. Many in Washington say this is the second most important job after the president. And progressives want someone that is a little bit more focused on banking regulation and climate. But I personally view this as their move towards leverage. They don't get a vote in terms of confirmation. Potentially, this is them saying to the administration, maybe pick someone for that supervisory role that could be tough on banking regulation. I view this as a little bit of noise coming out of D.C., especially since Treasury Secretary Janet Yellen already gave her influence and her high regard marks for Powell. That's a big checkpoint. So every day, Jonathan, we are going to be sifting through what is noise and what is tangible moves in D.C. that we need to worry about.
Anne-Marie, thank you. Our Washington correspondent down in Washington. Seema Shah back with us. Seema, let's start with you. A change of the Federal Reserve. Are you expecting that to make a difference, considering who's in the running? We're talking about Governor Brainerd here. Chairman Powell, Governor Brainerd. Aren't they the same voice, the same view on monetary policy at least?
Yeah, exactly. I think, it looks likely to be Powell. If it's Brainerd, slightly more dovish. Generally, from a market perspective, look, we want continuity, but I do think that Brainerd is pretty well known to markets. We really understand her views. She's been out there talking so much about diversity, about the need for having maximum employment in a slightly different way. So actually, I don't think that would be very disruptive to markets at all.
The risk, Michael Purvis, for many people is not that the Fed becomes too tight, it's that they stay too loose for too long and ultimately have to tighten more quickly. Is that the risk for you?
No, it really isn't. Look, that argument, John, it really hinges upon this concept that a lot of the inflation we're seeing is going to really stay incredibly robust on a very sustained basis. What the Fed has been haunted by, between 2009 and leading up to COVID, that roughly a decade, was the structural disinflation that was happening thanks to, in large part, thanks to technology. Technology, the growth of technology and the impact of that on inflation and all facets of the economy it's a difficult force for anyone to really regulate or to control. It just happens because that's the way it goes. And I think the Fed's very, very sensitive to it, and for very good reasons, which is, when we come out of this, what I call the plywood inflation and the steel price inflation and the oil inflation that we're seeing right now, some of which is directly tied to Fed policy, some of which is not. They're going to look at a situation where where in 2 years, are they going to be aggressively hiking into a condition where technology disinflationary forces are still present, and they're still trying to get the employment to population ratio back to where it was before COVID. And while they're also solving for less wage disparity and less of a gap in wealth, which is an important new priority for the Fed. So I sort of look at them as being really pretty more of the same, and I don't think we're going to see runaway inflation as a function of Fed policy. You might see very robust inflation due to other policies, but not because of Fed policy.
That's one side of the debate. That's one view. Chris Harvey, just to finish with you, you're at 48.25 year end on the S&P. Next year, you'd be looking for a down year, back to 47.15 on the removal of accommodation. How important is it for you, and why are you a little bit different to the thinking of saying Michael Purvis?
So what I think is going to happen, and what we've seen in year two of recovery, we've often seen multiple compression. And why would we have multiple compression next year? Well, one of the things we haven't touched on is how quickly the Fed will taper. And the conversation with many fixed income players is they're going to taper, and it's going to be 6 to 9 months. Many of the equity players are still thinking that it's 9 to 12 months. And the speed of the taper is very important. So by the end of the second half of next year, taper in all likelihood will be done. Now, one of the things that we've also talked about in the program is the supply chain, inflation, but more so inventories. When we talk to companies, inventory build really isn't going to happen until the end of the year, which means there's still upward pressure on price. And as we look at the inflation picture, and as we look at things, it's not because of it's because things or demand is just too aggressive at this point in time, and there's too much accommodation. So ultimately, what we're going to do is we're going to be staring into potential hikes at the end of the second half of next year.
Chris, stick with us. We'll build on this. From New York, this is Bloomberg.
moment Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Here are the morning calls. First up, Deutsche initiating coverage on Starbucks with a hold, expecting shares to climb, but warning the gains could take a while. Next up, UBS raising its price target on PVH to 159, growing more confident about the outlook after earnings. And finally, Citi raising its Netflix price target up to $5.95, touting the company's pricing power and loyal subscriber base. They're the morning calls. Up next, big tech returning to the forefront. Investors turning to the FANG darlings once more. From New York, this is Bloomberg.